iPhone that it heated up a little bit, but it hasn't been hot since then. So I did a little bitty poll in there. And also, apparently the same types of issues have been happening with iPhone 14 users as well. But one analyst said that the issues could be stemming from the lightweight design that cannot absorb the heat as well as the more heavyweight design did. You know, but either way you look at it, let's take a look at the share price action. It's down more than 9% this month. This was a launch month. Why are Apple shares down more than 9% this month?
Right.
You know?
Not great timing.
Not a great time. Down 14% from the high it hit in the summer. And some analysts say shares are still in a correction after that surge that happened in the summer.
Okay. Hey, bottom line is when stocks are doing what they're doing right now, it's not going to help to have Apple's big new product overheat.
Yeah.
So then again, you know, I'm a guy that doesn't have to be there day one to get the phone. So maybe there's a lesson learned here. Let him figure out the kinks.
Figure it out. This is the first time it used that particular material for the phone.
Yeah, wow, okay. All right, we'll follow the headlines on it, but obviously that's going to be a little bit of a thorn in their side, to say the least. Micron, we'll see if that's a thorn in the market side, but sort of a Rorschach test for investors there. Do you prioritize the story and the narrative going forward for stock like Micron, or do you take the numbers that are already in front of you, which are pretty rough? So, all right, thanks, Renita, for the report, too. A couple important tech stories. When we come back, let's discuss the macro situation, talk about the trifecta of inflationary pressure that's been building against stocks with Lizanne Saunders coming up next.
Good morning, September 28th. Welcome back. We're going to be streaming stocks, options, and futures trading. You're watching SPY, GME, BBBYQ, AMC, GNS, ever. Bubo, Rad. Give me suggestions. Sub up, like up, comment down. Happy Money sticks around. You can follow us on Twitter, Happy Money YT, and you can get on our Discord server. Link for both of those are in the description. You guys had a good evening, a good morning so far. I'm sure a lot of you already saw the news. Ryan Cohen is now officially CEO of GME. So not interim, not executive chairman, but CEO. So not a whole lot different than what he was. But now goes the crawl, the media liked it, and GameStop's up. So I'm not sure if this will have any sort of continuation or just sell off, but see. Maybe this is the first step to them making an acquisition that they said they were going to make like 3 earnings ago. Maybe it's with barbecue. Notice barbecue actually. Why is that all weird? We got 2 minutes to market open. Try and do one trade, probably 2, but I'll try and wait for the trade today. Most days you don't get a nice big reversal like that, so but there are days that happens. Yeah, I'm gonna try and be patient this morning. I don't do well scalping, and it doesn't work with my small account, that being a cash account. With the buying power, if it was a margin account, I can just keep going in and out. That doesn't really matter, but since I only have so much I can buy in a certain day, it doesn't make sense to do the scalp trades. And yeah, SPY is basically flat. Yesterday completed the cup. And they completed the handle. Well, no more today. We'll watch GME, barbecue. Here's if I can buy barbecue on Mumu. I've tried almost every day. There's the bell. Barbecue's at 12 cents. Oh yeah, I put this line in. You kind of see it was kind of just a bounce up to the top of that resistance for now. These two highs. Maybe that one goes. GME selling off a bit, opening up 4%. Yeah, still can't buy it on Mumu. Weird. Good morning to you guys. Gains begin to you as well, Joe. Morning, Tasty. I'll need a few shares of barbecue. That to happen, Benjamin. $100 share price. Barbecue would be pretty neat. Alright. City gapped up. Excuse me. GME only up 3 now. It's got a gap to fill. GNS up 5. So it'll bounce on that 82 cents. Same level. Cosm's up 1.5. FFI is up 9%. Peloton's chart looked nice. That RSI divergence. Gap up this morning. The news on that. Oh, partnership with Lululemon? Not a very big reaction from that. High ripping up there. GME opened up above that resistance. See if we can hold it. Little head and shoulders on the SPY without extended hours. Head and shoulders is in this cup and handle though. So have to see if this neckline holds. Line you could say is kind of right where you are right now. Barbecue down 10.5, 1250. Let's see, AMC down 1.8. Looking good, AMC. Breaking out to the downside. GME's hanging on at VWAP, 3.3% up. Thank you guys for your likes, I appreciate it. 6 likes, there's your red candle. SPY. Aloha Maui. I think this is great news, huh? I mean, they're not wrong. Long-term chart does not look good. Post squeeze. Peloton holding on to 6%. GNS up 8.25. GME's coming down, filling the gap. High's pretty muted. We did have some data this morning. That pump was from. The initial jobless claims at 8:30. GDP revision. Pending home sales in 20 minutes, 10 o'clock. And then Fed Cook is speaking at 1. And then J-Powell's actually at 4. And then tomorrow we have PCE, core PCE. So that should be pretty big data too. For the markets to move. GameStop up 1% now. Gap fill is at 17.16. There you go, GameStop. What do you know? Straight back down, back under the resistance. This to me wasn't really a catalyst for a rip anyways. Didn't seem like it should have been. GNS 9.2 at 93 cents. Low on SPY, I think. Yeah, new low. AMC down 1%. Buy back up to VWAP. Very slow morning. Home sales in 14 minutes. That's me. Windows really wants to update. Big gap down ACB. You see, all sold off. Oh, Newegg's been getting wrecked. Well, Newegg introduces graphics card trading program. I don't know. Really bad looking chart. GameStop's gonna buy Newegg. 10 minutes. So get some market action from that. SPY's been basically flat since open. A little bit red. Nirvana's down 4%. Didn't break out of that cup and handle. Ended up double topping. BFS kept getting wrecked too. Forgot that second bounce on there, which is kind of lame. Maybe it's still coming someday. Square's been getting dunked on. Barbecue at 12.50, down 10.5. GME didn't quite fill the gap. It's up 2.5. 17.59. Back above that resistance though. Coming up a little bit. Morning, Busy Bee. The trade with AMC. I don't think GME is going to run. Oh, maybe I'm wrong. They're rallied back up to VWAP. If it can stay above this resistance, then maybe it has a little short squeeze in it. I don't think it's necessarily tethered with AMC unless there's some serious volatility. So yeah, GME is actually waking up a little bit there. And I don't see GME getting crazy volatile to the upside until maybe never, but if at any time, probably over $30 just from what we've seen. Yeah, AMC is kind of not looking great, breaking through that wedge to the downside. Kind of wick down here, we'll see. Move down to that horizontal support. Yeah, 751, 750 area. Maybe for one day. Market's not wilding yet. Housing data in 5 minutes. Nice show of support there on GME. Bouncing off that resistance. Buy climbing up more. Coin may go crazy. I mean, we had the pre-market move was what, like 8%. He was already executive chairman, so basically already CEO. But it wasn't like necessarily news. Now he's more formally the CEO, I guess, and not just the interim. Yeah, I've been surprised AMC hasn't had more rips, more spikes. Shark Ninja. Look at that thing. Done pretty well since IPO. Excuse me. That's yeah, that's a good IPO performance right there. Spine from red to green. If we get to yesterday's high. GME holding 2%. GNS up 11.5. Bye. 10% on that one. P. Pretty flat. Mullet. Oh, housing data came out. Didn't see any reaction on the market. At 10:03. Rumble's up 4.5. Got Peloton up 4.5. Jumia is down 1.3. Last final support here, 2150. Okay, I'm closing one of my calls. I did actually get calls there. I know. I'm putting a stop on the other one. And I sit. Break even stop. .9% on GNS.
Also arrived basically perfectly at neutral. He's trying to keep the market in this balance, but that also means that maybe from a news perspective, it's not really going to be a big mover for the market. I saw yesterday, one of the sell-side Wall Street firms ranked all of the Fed members from hawkish to dovish, and they were like perfectly distributed, like binomially around the middle, and Powell was right in the middle.
I think Jerome Powell has orchestrated this in a pretty expert way. I think he believes in the Ben Bernanke theory that it's what you do and it's what you say. And you could do a lot of work fighting inflation by the rhetoric that comes out of the Fed.
Sure.
And I think that's what he's done just as well. I think I'm counter to a lot of people's opinions. I think he's handled this rise in rates, this fight against inflation, as the absolute best he could with the tools he's been given and an administration that's been basically working against him the whole time.
Hey, well, I'm coming around. The more the yield curve steepens out at this point of the cycle, you got to give him some credit. So markets are hoping that maybe tomorrow's not a shock inflation, that today's data a little soft can maybe give some reprieve. We are getting further gains here as the rest of the market tries to catch up to the Russell. Thanks, Kevin.
Yes.
Appreciate it. All right, little bounce here underway. Maybe a little reprieve before tomorrow. Let's go to Kevin Green and let's talk some earnings. We've got Nike tonight. Will we get any reprieve for this stock, KG? Because, man, it has been a massive disappointment.
You hope so. I mean, at the end of the day, it's actually trending towards its lows from last year. It was trading at around $82.22 at the same time. So it's not a good round trip when you're looking at Nike. But the street's expectations could also be a little bit low because we have seen a trend when it comes to not only these clothing and apparel makers, but also retailers, that sales are looking a little bit soft when it comes to the consumer here, especially as consumer discretionary spend is adjusting. But the street is actually looking for revenue to come in at around $13 billion. That would be a 2.3% increase on a year-over-year basis, but the adjusted earnings per share is going to be the highlight. Right now, the street's looking at adjusted earnings per share coming in at around 73 to 74%. That would be a 21.5% decline on a year-over-year basis. The gross margin is also supposed to decline by 50 basis points. Operating margins is also supposed to decline by 3.3%. That's not a really good recipe, Oliver, if you were trying to buck the trend, but obviously they have been focusing on their consumer direct acceleration strategy, really trying to go direct to consumer. That has been a little bit more of a profitable business, but they are seeing some weakness when it comes to China sales. It has not grown as they have expected. If we continue to see this inventory backlog, especially in China, that could also force them to mark down items even more, reducing that gross margin, reducing the operating margin, and that would probably continue this downward trend when it comes to price for Nike.
Okay. The last earnings were not terrible, but the stock still did terrible. So at this point, it's like the bar is kind of high, the vibes are bad, the technicals are ugly. The only thing it seems like you can see on the chart in its response to earnings and the general trajectory that might give us some hope is that it's so bad, maybe it's good. I mean, we're down here at the lows of last year, which is pretty crazy.
Yeah, I think it's going to be about the commentary. So you're right. When you're looking at the earnings from last quarter, they weren't bad compared to the street's expectations. But the commentary around the weakness in China is what really drove the stock to the downside here. Now, in the last 4 quarters, they've beaten estimates twice. They've missed estimates twice. So it's kind of a 50-50 shot right now. We have the implied option market.
There's the top of that cup again.
Of around 5%. That could change.
A little resistance here.
Maybe the equity market trying to push some gains here, maybe pushing some of that volatility down. But overall, once again, they're going to have that commentary, and the commentary is going to be very key what happens in China. If their inventory management continues to be an issue, and if they're continuing to see weakness in China, that is not going to be good for this stock. We are seeing this transition for consumers really focusing on outdoor apparel and athleisure, if you will. So at the end of the day, that is something that Nike does have exposure to. It's around, let's say, 30% of their total
now
sales.
VFS makes up.
But once again, Footwear is around 66% of their total
Way to
sales.
catch
And we're
that.
starting to see a little bit of a slowdown when it comes to that type of spend across the board. When you're looking at China, when you're looking at the North American segments, and even the European and Middle Eastern segments as well.
Okay. All right. So the growth potential here rests on China getting back online. Macro themes generally, not like there's going to be some big product unveil. I don't think they're making AI shoes, right? They're not going to spin it that way on us. They don't really have a bailout there.
I don't think so. I mean, if we do get a product update, it would probably be more around like any type of app usage. I mean, we had that news yesterday between Peloton and Lululemon. I mean, they might address maybe that particular market, since that does seem to catch a little bit of caught a little bit of steam when it came to those particular stocks here. But I don't think that they're going to name anything around AI as far as from a consumer standpoint. They might mention AI in order to improve their inventory management systems, but obviously they're not going to have AI shoes, right?
Yeah.
Maybe they will. Who knows? Who knows?
All right. Well, I finally did it. Got my first pair of ons. Whoo, boy. I cannot recommend enough. Not a recommendation for the stock, but for your feet. Whoo, man, those puppies are cozy. And stock's done amazing. So their work is cut out for them, both on the macroeconomic front and the competitive front at this point, frankly. So I feel like that's maybe gone a little bit underappreciated, you know? Because there are apparel stocks and athleisure stocks that are doing just fine right now. On is one of them, and then Lulu's the other. So both those companies trade near 52-week highs. So, I mean, all right, On started to roll over a tiny bit, but still holding on to support. Thanks, Kevin Green. Appreciate the heads up here into the earnings. Let's do some trading with Scott Bauer, CEO of Prosper Trading Academy. Taking a look at the report and Nike shares ahead of it. Scott, what do you think?
Well, in your comment about the On shoes, I have them also. They're awesome. I wish they had On ski boots. Then you and I could ride those together. But
yeah.
with Nike, right, the path of least resistance
hiking boots.
is definitely they do. The path of least resistance is definitely to the downside, and to say that the stock has been a major disappointment is really an understatement. However, as you and Kevin just alluded to, the stock is trending down towards those lows from last year in that 82, 83 area. Longer term, if the stock gets down there, I want to own
Jack.
it. I
Everyone
really
held on to
want
him?
to own it there. It is
Good morning. Yeah, I think
and
a lot of people have held on to their
probably
barbecue
not
shares.
without good reason, but it is oversold. So I normally don't trade options that are further out than a month, maybe 6 weeks or so. In this case, though, what I'm looking to do is I'm going to sell the December expiration 82.5 put. I can collect somewhere around $2, maybe a little bit more for that. Effectively, that gets me Nike stock, if the stock were to drop, down around the 80.5 level. The reason I'm doing this is because if the stock dropped down there, I'm buying the stock outright anyway. This way, I get to sell some option premium. It gives me time for the stock to do something to recover. It also gives me time if I want to get out of the trade or do something option-wise against this put, I can do it. But effectively, that's why I'm selling this put, to buy time, to collect premium, and I don't mind owning the stock at that $80 to $80.5 level.
Okay. It's similar to Alex's trade that he did ahead of the Carnival earnings, which is basically an expression of confidence in the longer-term potential of the company, because if the trade goes against you, it doesn't really. You just buy the shares. You are prepared to do that because you do want to own the shares, but you prefer just to collect the premium, probably.
That would be great. However, in this trade, because we are looking out, at almost 3 months
Let's
of
come
time,
down here a little bit.
Premium is not going to collapse so quickly unless there's a big rally in the stock. So, yes, I don't mind holding this again. The only reason I would ever sell a naked put, which this is if I was 100% certain that I wanted to own the stock at a certain price. And I think for me, the reason I'm using those December options is just what you said, Oliver. It's given me a little time in case the report is, not so great. it gives me some time out to December for the stock to level in at 80 or higher.
Okay. And that's also the low from last year. It seems like that's pretty clearly what you're targeting there, that you don't think Nike needs to be or should be making necessarily fresh new lows below 82 bucks.
I mean, I would hope not, but you know, as you and Kevin were talking about, so much of this rests on China, right? Which is absolutely a wild card. However, again, the bottom line is Nike at 80 bucks, I'm buying it.
All right, there it is. Bottom line. Thanks, Scott Bauer. Appreciate the trade.
Thanks,
Hopeful on Nike, able to retain its range, but wearing ons while making the trade. Thanks, Scott. Coming up, let's talk some bonds and how to invest in treasuries, fixed income as a whole. We'll expand the convo
GME's
out
filled its
from
gap.
the treasury market into corporate bonds as well, where there has been a little bit of softness creeping in alongside stock.
Filled, it's almost red. Barbecue still hanging out there. GME about to go red. FS 7%. Oh, just sold off there.
Every year, cost and total cost of ownership ranked #1 and #2. So we continue to do what we can to use our size and scale to bring down costs of investing.
I mean, frankly, all the academic studies basically about the value proposition of ETFs and investing as a whole is that for most people, a lot of their opportunity costs come from the price of their products. So cheapening ETFs basically I mean, just like mathematically gives you a better shot at hold on to your money, maybe even beating the market. It's actually like part of the strategy, right?
That's absolutely right. When you look at investing, there's a lot of uncertainties. The one thing you can control is finding the price that is the lowest in what you want to invest in. And if you can control that cost, that's going to put you a large step forward to meeting your investment needs.
Tell us about what you're seeing right now, the client base on the asset management side, and particularly on the fixed income. Where are the movements happening? Where's the flow changing over the last couple months as we've gotten this move in bonds? Has it meaningfully or drastically changed anyone's mindset or where they want to put their money?
Yeah, you know, it has. It's a slow progression. You know, fixed income ETFs broadly are leading all flow categories in 2023. So that's great to see. But we are seeing a little bit of a change in the leadership in that space. When we looked at 2022, you saw a lot more short duration winning the asset base, right? There's a lot of uncertainty about where rates are going. Now, that's not to say we don't have uncertainty today. We've seen the volatility, the 10-year treasury, but what we do know is we're probably much closer to the end of this rate tightening cycle than at the beginning. So investors are starting to look at those longer, say intermediate type of exposures and locking in here at these levels because I think we're probably not that far off from
another gap on GME.
Okay. And we're talking treasuries a lot, of course, and then obviously the
real.
TIPS ETF where you just brought
That's
down
intraday.
The cost is a
Is it seriously that illiquid? We're getting gaps intraday.
Discussion, but on the corporate side, things change a little bit there as you drop the price.
That's
also
crazy.
For the
That's
high
back.
yield. Tell me about the corporate world. And
I remember seeing that on the
what's
1
going
minute at
here
times on
as the
GME.
stock market sells off. Should we expect
remember
the
last time we
corporate
saw it on
bond
the
market to come
5
under
minute.
some stress?
Well, you know, it may, but what we're
What
seeing in
the
flows
heck?
doesn't necessarily reflect that. You know, our 5 to 10 year corporate bond
wild.
ETF, SCHI,
GME's now
is the
flat.
ticker. That's leading the category of fixed income flows for us this year. In fact, it's leading the category as a whole.
Not for long.
So it does look like investors have some confidence in that space, at least in the investment grade space in the intermediate term, that they're pretty comfortable with where it's at today.
How much of that is a confidence that's built since the spring scare around regional banks? Because everybody was expecting there was going to be a big credit event, which is obviously the major driving factor of corporate bond spreads, and it just didn't really happen. I mean, there hasn't really been a huge move in spreads, so I would imagine that's instilling some confidence.
It is starting to instill some confidence. The other thing we're seeing is the uncertainty in the equity markets, right? The first half of this year, equity markets were really going strong. Now we've gone through a period of volatility in August and September. So even though there's volatility in
invigorated water makes it easy.
In the equity markets, so in some cases, it's also taking that
Sorry.
position to be a little bit firmer in their portfolio allocations.
My bias on municipal bonds from my early reporting, I'm curious because you guys launched the Muni SCMB, the Muni Bond Fund in 2022. What does that interest look like right now? I mean, is there a lot of new paper coming to market from municipalities? Is this just the tax-free interest that investors always have in munis, or what's driving that market right now?
Yeah, so first off, let's talk about issuances quickly. Issuance has been relatively hard to get your hands on the municipal space. There's not much interest, especially in the short end. There's not a lot of interest in municipalities issuing in that space because rates on the longer end are good. So it's a little bit of a dichotomy in that supply, whether you're looking at the short end or the long end of the muni market. In terms of demand for investors, I think it's really twofold. One, as you mentioned, tax-free income. Attractive tax-free income never goes out of style. The other aspect is the portfolio diversification. You know, these same credit woes.
Back to VWAP. GME is now red.
The equity market in the same way. Municipalities can be a little bit more dampened by that, and sometimes show really attractive diversification opportunities within a portfolio relative to corporates.
Interesting. You get a little different sample size of it's almost a little bit of a different asset class in some ways, right?
That's exactly right.
Okay. So I'm curious, you know, when you from the asset management side, is the idea? Do you get a lot of clients talking about just capturing the yield right now? Do you see that as a main theme where people are going, you know what? I don't want to try and figure out how to game the market. I'm just going to lock in my 5%. We had a really interesting discussion yesterday with Colin Roche about how folks should be a little careful about going too far to like be just purely you know, attached to short rates, but it's a pretty juicy option right now.
Yeah, the short rates are a very juicy option right now. But I think there's a big outstanding question about how do we end this interest rate cycle that we're in? Is it a soft landing? Is it a hard landing? Right? That's going to really affect where short-term rates are at. You counter that to say, well, if I'm in intermediate space and a 10-year treasury is in a 460 range, so you can get a little bit more if you're taking some credit exposure in that. And if I can essentially lock that yield in today for a sizable period of time, that may be the better opportunity for me rather than keeping on the short end, where I'm not sure how long I'm going to continue to get the yields I'm getting on the short end of the curve.
Okay. One of the other ways that you're looking to address some of the market dynamics right now with the asset management investor base is through direct indexing. Tell me about that for a second. How does that fit into the options list for investors right now on how to pursue their portfolio?
Yeah, you know, I mentioned the municipal bond and the attractiveness of tax-free income. Well, when you think about direct indexing, you're getting very similar exposure to what you get in traditional index ETFs. But the primary benefit that investors are looking at when they're going
Stopped out of my other spy call.
is something called tax alpha. The ability to
Might be getting back in them here, though. We'll see.
Gains that can provide you additional benefit in the total outcome that the portfolio is delivering for you. So investors that are at higher income brackets, that have a lot of taxable gains that they're working through, that direct indexing can provide a great benefit to them.
Okay, very cool. All right, appreciate the rundown here, David. Thanks a lot.
Thanks so much for the time.
Absolutely. A lot of different ways to get into it for the bond side of the portfolio. David Bonset, Head of Equity Product Management and Innovation at Schwab Asset Management. And at 3 bips,
below
too,
VWAP.
pretty cheap in bond land. Coming back, we got some charts. We're going to take a look at one big winner, General Electric, another big loser, UPS, Redfin, maybe somewhere in the middle, but not the hottest of charts by any means.
Buy coming down here. GME is down 0.5%. AMC's down 1.5%. Barbecue at 12 cents, down 12.5. Nice little double top up there on SPY. Top of that cup. EFS up 12.5. And SPY just in a bit of a chop now. So he's down 2% now.
it went to a neutral from an underperform.
Right, okay. So that big sell-off here, I guess, makes it a little bit more appealing to analysts, perhaps, Rick, but to the point of the macro part of that note, it still is very murky, especially with rates moving the way they are.
It's a rough time to be buying a house. My sympathies to anyone doing it right now.
Yeah.
My sympathies to anyone who bought in before last earnings, too. We had a 24% one-day drop, just brutal price action there. And we found some support near the 970 level. That was our old lows right there. That's where we took a bit of a pause there, but we just plowed right through it. That became resistance then. Old support can become new resistance. Always worth watching these key levels on your chart, even if they're breached, because they can come back into play like you saw here. Downward trend, moving averages all trending down, price below all of them. They're diverging apart from each other. No sign of this trend turning around or lessening here in terms of this downward price action. We are near another support level, the 680 level, this green dashed line here. I was wondering if we might see a bit of a breakout from our trend line this morning here. It looks like we're fading though. The strength that I was seeing earlier is degrading a little bit here. Momentum also not looking good for the bulls.
Oof, yeah.
Our RSI oversold, quite low really, around the 22 mark, and we can see if we were to continue to degrade, make some new lows with price, we'd also be looking for RSI to make new lows as well.
Well, that's what I noticed here is this thing is like trending down. So the price is trending, the momentum's trending down. So it's like it's getting worse. It's like snowballing lower.
It does seem that way. Got a little bit of a volume node here. We could be finding this as a supportive area. If we break to the downside, another volume node here. I don't know. I mean, we could see that. 520 would be my next guess here based on our old lows from back here, this light green line. To the upside, our trend line is the mark to beat, and then our 21-day EMA right around there near 820.
Okay, so the hope is that this $7 level holds as some support. If not, then, and it kind of looks like the momentum's telling us the odds of that are low. But at least it hasn't broken the way UPS has quite yet. So Redfin's still, up on the year. UPS has been getting killed, Renita.
Absolutely. Barclays cut the price target to $175 from $180. That still leaves around a 14% or so move to the upside from where it's trading today, though. And they kept an equal weight rating on the shares. Now, this has a lot to do with UPS losing market share, losing a lot of customers after labor disputes that happened this year as well. And so the analyst wants to see how management's going to handle that at the company's next event. And also, he wants to see the company's ability to battle inflation. How's it going to offset it? Are UPS managers going to raise prices to offset inflation? Are they going to become more efficient? Are they going to cut jobs to try to bring down costs a little bit more? And meanwhile, as you can see, the stock is actually up today. Now, it did announce that it acquired a medical logistics firm. It's called MNX Global Logistics. And UPS wants to get into that growing medical logistics, fast needed packaging and shipping and delivery.
GME is down 1.4.
It's been a really growing industry, a growing market, and capitalizing off of it. So that's likely why
under
shares
resistance.
are rising today.
Okay, so they're trying to keep some of the hope alive here, despite some of the labor pressure, a little bit of competitive edge being lost, but at least there's still enough demand, that people are buying and the packages are going out. It's just a lot of them are going out via Amazon, maybe FedEx too. What's happened here in this chart, Rick, with this like triple bottom RSI thing going on down there?
Yeah, kind of an unusual situation there. But to start just characterizing our price movement here, we had some highs around earnings, and it's really just been straight down since then, dropping like a rock here through all our relevant volume nodes here. I was wondering, if this 170 level, we could find some footing, and we did see a little consolidation there, but really it was no match for this relentless downtrend here. Last time we even touched our yellow 21-day EMA was all the way on August 8th,
climbing back up
so
there.
not even an opportunity to really use these moving averages the way they're traditionally used, as resistance during downtrends and support during uptrends here. So this would be perhaps the selling opportunity if you were still bearish in this name, if we got a touch of that 21-day EMA, but we haven't even had a chance really for over almost 2 months here. So we broke through another important level recently. The 155 mark, this red dashed line here, represented those old lows from all the way back near you, Oliver. Also broke through our -2 standard deviation channel. Since we're making new lows, standard deviations can be helpful with extrapolating where we might find support and resistance here. The -3 channel comes in all the way near 145, so that could be an area to watch for potential support based on this study. It also
retesting that high, close to the high of the day.
The downtrend line going across the highs,
Yeah.
pretty close
See if
there.
we break
So
it.
It's pretty ugly. We get into 3 standard deviations off to the downside.
Stocks usually stay between like +2 and -2, so a move beyond this level is noteworthy. Little tiny bit of bullish divergence in the RSI though. Weird, like you said, kind of this weird like triple bottom type action there. But we are trending upward a little bit here as price continues to fall. We did cross above that 50 midline as well today here, so maybe a little bit of a turnaround in store, but unless we make a convincing break above 155 to 156, I would be beware of this one.
Oversold, right? We got a little bit above the oversold
yes,
line.
excuse me,
Okay,
oversold.
so it's still downtrending, but at least it's slowed kind of on the margin, the rate of change in the last couple of weeks. But you got to squint to see it, and otherwise a guilty chart.
Did grab
until
another
proven.
call. We broke this channel.
I would say, all right, thanks. Nice charts, Rick. And Renita, thanks for the analyst
Considering
commentary.
closing it here.
Market's firming up. We do have
10:45.
across the board. Give you an earnings update on stock that's red though, CarMax, after its report.
Put a stop on it at
Sell
least.
off and sell off pretty hard.
There's new high on SPY. Let's see, we got 427.53 was pre-market high. Yesterday was 427.54. Might be a little resistance there. GME is down 1.8 now. Bon voyage.
the third quarter of last year to me signaling some signs of improvement, but this is just such a fragmented market and it's been so volatile over the past couple of years that not surprising to see this year-over-year weakness, but results all in all did slightly exceed expectations. This name was up 30% into today's open, so it had seen some degree of outperformance, but obviously today giving back a lot of that strength, now down 13.5% this month with this move to the downside today, obviously.
Yeah, okay. A lot of negatives in this report. Some companies get a better treatment than others. CarMax, no forgiveness here. Even though we saw a bunch of negative numbers in Micron earnings, market's got a little bit more tolerance, I guess, willingness. But that stock's down too. So both our earnings events leading to a little bit of negativity here this morning. Thanks, Jenny. All right, CarMax comps down pretty big, almost a double-digit territory. So certainly some of that trade has slowed in the used car world. I got Nick Theodorakis and Chris Perkins joining me this morning for our market meetup discussion as equities bounce back and we got some green on the board. Nick's a financial risk management director here with me in studio, and Chris is manager of brokerage services joining us on the line. CarMax under some pressure, Micron under some pressure, but it seems like, Nick, this morning with a little relief in bonds and the dollar, stocks were able to find their way higher.
And oil too, right? A little bit. Oil's down about 1% now.
Yeah,
So
WTI stopped.
Yeah, some of that trend that we've seen, I think, just kind of running stocks over here for the last week has stalled a little bit. But you take all this car news and the auto workers story. And
some news there too, actually.
And coupling all this then with the unemployment numbers from this morning, the jobless claims, still only at 204 and $92 a barrel of oil. I don't think people said, oh, we're going to get to 100 again. And I don't feel like people felt like this week was going to be that story. So just a really interesting kind of culmination of events here, largely tied to the auto industry. But then you also have this interest rate story that's still going on. And, inflation is just sticky enough still, and we're still inflating, right? We're not deflationary by any stretch. And then you get to this point where the rates are just not really going anywhere because of that, and I think it's not a great story for equities. So that's kind of the. I
mean, that's really what it comes down to, right? Is that there's no particular reason for any of the weakness necessarily to stop until you get a couple days like this. We get maybe a couple
Mark
days
the Shark?
down 1.5%. The dollar down 0.5%.
Guten Morgen to you.
Maybe stocks find their mojo again, Chris. But so far, this morning is kind of the first bit of relief we've had all week.
Yeah, it's actually kind of a calming inside day here, it seems. There's a little bit of a test come back to the high side on ES as an example. Looking at crude oil, it just touched off on an hourly basis off the 50 simple moving average at about 92.30 or so. A little bit of calm before the storm tomorrow. It's going to be interesting to see if they're going to come in with the energy prices coming in on personal consumption expenditures and see how that's affecting us overall. It's also going to, with the way energy prices have been moving, that's going to continue to drive food prices higher because you got to get food to the stores, and it takes fuel to do so. Crude oil seems to be a currency in and of itself.
Yeah, it has been. Hey, coming back to the auto story for a sec, because we got a little bit of a headline this morning I wanted to bring up. UAW
Jamie's down 2.3 now.
For a 30% wage bump, which is
Got an
down
engulfing
from
candle on the daily.
40. That seems like maybe we're getting somewhere, possibly, Nick.
I said the same thing the other day. Like, just a 30% raise would be fine.
For you?
Yeah, no, I'm kidding.
Oh, okay.
No, it's when you look at sort of the way that this is all being played out, and I think we don't talk real politics here, but I think it's absolutely fascinating to see how both Democrats and Republicans view this as maybe the most important issue right now going into the upcoming election.
Not a coincidence. It's linked to inflation.
And completely opposite ends of the style of in approaching this. So it's a big deal outside of just the UAW strike. You've got electric cars kind of in the mix on the conversations, which are largely not made by union workers. When you look at Tesla, you've got other non-union car companies. You've got the Hondas and the Volkswagens of the world, and it's sort of a north versus south thing too, right? You've got the union kind of talk in Michigan. You've got the you've got southern states where you get a lot of like the Honda and Toyota products built. So it's just amazing how this is playing out. I think seeing all that, vying for, for votes ultimately in this election, it's just really interesting to see that front and center.
Good caller working full time. Well done, man.
I think we saw the writers' strike come to a close.
Yeah, that's exactly what I was thinking.
Concessions by the studios.
Bears got
like
some liquidity to short down.
Right? Workers are sort of compromising a little bit more so far than the manufacturers are, and I think bringing that together is important. But based on the story Jenny just told us, supply is still an issue, right? If this goes on a long time, there's an inflationary problem here as well, because there's just not cars to
Where are you working?
Well, the other thing too is that
Is
there
it
was
your,
a report yesterday that maybe
field?
the Vegas hospitality unions were going to start striking too. This is where tomorrow, back to the inflation print tomorrow you're talking to us about, Chris, it gets kind of interesting because on the one hand it's like, all right, the market would probably love to see a light print if we're able to get one. I mean, it doesn't seem like we should really expect one. We're expecting inflation to warm a little bit. But even if it does give us something light, there's plenty of reason to think that down the road some of these inputs are worsening to some extent because these labor efforts are going to show up eventually for wages, and that's going to keep a bit under inflation, shouldn't it, Chris?
Absolutely. There's an interesting point that was made earlier that the auto workers strike really hasn't affected the unemployment numbers. Well, they're technically not unemployed. They're on strike. They're still being paid out of the coffers there. And then you're looking at the hotel industry getting hit potentially with a strike, which was a high vote to unanimously go ahead and strike, but there hasn't been a date set. Still trying to talk things out in negotiations of contracts. But how's that going to play out as we continue to move forward, especially with people wanting to travel more coming into the holiday season? You're going to have less people working in the hotels potentially, and that's just going to drive a lot of the cost of inflation across the board.
Indeed. All right, nice closing thought there. Appreciate it, Chris, Nick. Good way to cap our show here. Thank you for joining Morning Trade Live. I'll see you this afternoon at 2 p.m. Market on close. Trading 360 with Nicole Pedalides from New York is up next.
Park Ranger? Oh, it's awesome. Yeah, you get paid pretty well and pretty good benefits. That's a pretty mellow job too, right? Yeah, big falling wedge basically since the squeeze. Big one. Yeah, a break on that. I haven't actually charted out the wedge necessarily or fib levels, but yeah, break. If we do break this 15 level, I don't know. The horizontal level, the next one I have on there is 10. So. These resistances have been pretty consistent though since that earnings, 2 earnings ago. Ah, Siri. Seriously, Siri. Let's see, what is Siri up to? Potential merger news. Remember this thing kind of squeezed. Could be good. Assuming that's what all this volume is on. For merger. First thing I see is that RSI divergence. It's bullish. Yeah, it looks pretty good. Not a whole lot of price action to get a very clear structure, but breaking this, the resistance is made. Close this last call, I think. On 11 o'clock. Using log or standard fib. 14.5 or 9. That call. Yeah, Siri looks pretty good. Like it. GME down 3.5 now. Yep. Got 16, 18 for the low down here. 15.5 is the next one down. Jeez, Mark. Because it's pretty slow most of the time, and then every now and then it gets exciting real quick. From 0 to 100 in a hurry. Yeah, I can see that.
Turn our attention to Micron. That stock is under a little bit of pressure, less than stellar earnings. Your takeaways?
The takeaways here is that this company is going to be a long-term turnaround story because we haven't seen these markets bottom yet the way that so many had hoped with the hardware that they offer. And AI is not enough to offset some of the weak spots Micron pointed out in their earnings. Now, they did report revenue of around $4 billion. That did beat estimates of around $3.9 billion. There was that to look forward to. Their losses did also beat estimated losses, so top and bottom line beat, which is a win here. But the CEO did say that amid this challenging environment for the memory and storage industry, they've been able to reduce some of their costs. They are also focused on a number of leading edge products and taking decisive actions on their supply and demand issue, saying that their 2023 performance positions them for a market recovery to take place in 2024. driven by some of these AI data center and various offerings into the data center and AI world. They do expect their fiscal first quarter revenue to fall between 4.2 and 4.6 billion. That was well above what they had previously laid out at around 3.97 billion on earnings that are expected to be actually a loss per share between $1 and $1.14. That would be greater than the losses reported a year ago. So Street maintained their positions for the most part. I saw Citi keep a buy rating. Baird kept it neutral. Rosenblatt kept a buy. Just seems like when it comes to this name, it's going to not be the same degree of growth that we saw from Micron several years back. And it's definitely not the growth story that we're seeing in names like NVIDIA, for example. So the Street is sort of unsure what to do with Micron's earnings here.
All right. And Jenny, I loved your 6 years post. Congratulations. Continued success, Jenny.
Thank you, Nicole.
That was great. Jenny Horn, markets correspondent. All right, let's take some insights in the news shaping the markets. And for that, I welcome in my good friend. We've been here forever and a day here on the floor of the stock exchange. Ted Weisberg's with us, founder, president, Seaport Securities. Good to see you, Ted. How are you? Teddy's here. So, what are you thinking about the markets? Are your clients calling you and saying, Teddy, what's going on? It's all down arrows.
Yeah.
They must get nervous because August, September, October traditionally are weaker months anyway.
Well, I don't know about the traditional part of it, but certainly September so far has been an underwhelming month to be kind. Listen, there are so many issues out there. What I find particularly frustrating about where we are now is that all of a sudden the focus has turned almost completely to the 10-year and interest rates. Yeah. And you got to wonder where these folks, what rock have these folks been hiding under for the last 3 or 4 months, because the direction of interest rates has been relatively clear. The frustrations of the Fed, and we've talked about this in the past, the tug of war between the fiscal policies where the government continues to spend money like a bunch of drunken sailors, and then you have the Fed on the other side of the equation trying to rein inflation in and raising interest rates. So you've got two huge factors pulling on the same rope in opposite directions. But clearly the 10-year and the direction of interest rates for some odd reason has finally hit home. And all the negative ramifications of higher interest rates. Yeah. So it's bottom line, it's been a difficult period. Sure. Even today, we see some green on the screen.
Yeah, GME killed last earnings.
You have to wonder if it's just a little technical bounce over oversold position, because quite frankly, nothing has changed. I mean, it would be nice to see equities rally. The good news is, I guess, we're coming to the end of the third quarter. And so soon we'll be going into earnings, and on balance, earnings usually come in better than
beat
expected.
Expectations on,
and
like,
the markets
all
in
fronts.
general seem to do better during earnings
They're
reporting
basically
season, and that's just a couple of weeks
EPS
away.
now.
So perhaps that's
So
something
close,
positive to look forward to.
So people shouldn't have been surprised by the Fed's higher for longer. That's what he's been saying the whole time anyway. So you're not surprised. At this point now, when you're trying to search for value, what do you tell folks what to do or not to do when it comes to their money? I know there's short-term and long-term advice, but what do you tell them?
Well, I'll say this, from a practical point of view, everything that we have tried to do in terms of equities so far, at least this month, has been wrong. No matter what we have done, we've been wrong. And I suspect we're not alone, but I can't speak for everybody else. In the way it's been a very difficult period. So, and we've seen our order flow at Seaport basically dry up as the markets get more difficult, get more frustrating. The clients aren't stupid. They basically just kind of push themselves away from at least the equity table. But the flip side of that is, and we've been in this trade for months now, is the short-term treasuries. Now, there's nothing unique or unusual about that, and all of a sudden it's become the go-to trade. But the fact is, you can get 5.5%.
Have patience for this move is waffling around too much.
3 months, 6 months treasuries with virtually no risk. And when you don't know what to do, sometimes the best thing for investors to do is simply do nothing. Yeah. If you press, you're going to make mistakes. You sort of need the wind behind you, not in your face. And right now, I don't know if the wind is neutral but it's certainly not behind us. And it's just a difficult period. Now, maybe we've seen the end of the weakness. I don't think so, because until we see some light at the end of the tunnel vis-a-vis interest rates, and we have to make sure that that light at the end of the tunnel is not a train coming at us, but in fact is some sort of relief. It's just a difficult environment, Nicole, and you'd like to be very smart, and we're value investors. There's plenty of choices out there for value investors.
Let's get to some of your names. I mean, you talked about Chubb, different times that you've been on. In fact, it has been moving higher since you mentioned it. And it's a name
poor
that
performance.
you still like, right? 1
Oh,
year
as far as the stock?
19%. Where do you think? What kind of upside potential do you think?
Was it this earnings that he
because the whole
fired
insurance sector
furlong?
is a big sector, and it's
That
probably
was last
a
earnings,
mistake
huh?
to pick on one name, because there's plenty of good
Yeah,
companies
it was last
within the
earnings.
insurance sector. But we like the sector.
I mean, the
because we
stock's
think it's a
pretty
sector
controlled
that
still.
Has two things.
I don't know.
Number one, pricing power. Every time there's a lot of claims in insurance, all they do is raise the premiums. So they have one bad quarter, and the next, and then
13
they're,
Wall Street is here when they
kind
hit
of,
Cohen.
going forward. In a
I don't
positive
really
way.
follow it
But the
that
other
closely.
is insurance companies have
Know if they
huge
hit one more than
reserves
Cohen.
by statute.
I know
in a
they.
zero interest rate environment, those reserves basically weren't returning any real money.
I don't know.
But in the current interest rate environment,
feel like they
those
necessarily hate 'em.
reserves are money in the bank. So you want to own companies that can take advantage of the current interest rate cycle, and at the same time be in a position where they can pass along price increases, and insurance is one of those areas.
Look, it's a 213. RBC has a 245 price target. They
Advertising?
reiterated their overweight or outperform on this recently, and said compared to the peers,
They need something new to
it
be
was
advertising,
looking
though, right?
good. Visibility around mid-teens return on equity, strong earnings per share power. So they like this one well into 2024. So you're on the same page. What about when you look at some of these energy names? You have Exxon and Occidental Petroleum.
Well, we've always had exposure to energy. We just
Is position temporary? I mean,
listen, I understand the whole EV.
all positions are temporary. It's on a
I don't think
contract.
the world is going to abandon energy for any time. Certainly in
Right,
my
that
lifetime,
expired.
which is a lot shorter than yours. But the fact is, energy is not
Think,
going
isn't that how it
anywhere, in
works?
spite of all the political rhetoric and the philosophical rhetoric. Now, it's kind of an obvious play with oil at $90 and not $50. You don't have to be a rocket scientist to think you want to be long energy stocks. But the fact is, they still represent relative value. Now, you have to make a bet on where you think energy's going. We happen to think it's probably going to stay in this area or work higher, but that's just our opinion. But
Everyone
a
here
lot of
wasn't. He was
most
there
of
for a
the
couple
big
years, so I
energy
think, wasn't he?
companies pay very generous dividends. So you're getting paid while you wait, and clearly, for whatever reasons, oil's at 90, not 50, and is it going higher? I don't know. There are some folks. I mean, I heard a number today that I'm a little embarrassed to repeat, but somebody said they read someplace where oil was going to $300 a barrel. I'm not sure that that's quite accurate.
How quickly will that happen?
Yeah, well, I
Bitcoin
mean,
gets-
I think that's a
when
lifetime
Bitcoin gets
issue,
to the,
right?
million. Well, we'll see. I mean, you never know. There are people who come out with some really bullish big calls.
Well,
We'll see.
Nicole, even a broken clock is right twice a day, so I'd be careful about those outlier projections. But clearly, oil is a good place to be at the moment. Yes.
Okay, Teddy Weisberg, thank you so much. Ted Weisberg of Seaport Securities. Thank you for being here. Plenty more to come here
We're
on
bouncing
Trading
around
360. It's the big three.
1645 on GME.
Trades. Rick Ducat will take us through the technicals. Dan Deming standing by. He'll take us through the trades for Marathon Petroleum, Cintas, and Micro.
Or rebranding. Yeah, they could do that. Need like maybe a new logo, new website, refresh everything. Gamers do seem to be pretty loyal. Yeah, the player thing is seems like there's a lot of opportunity for let's see. I'm gonna check that out like since it came out. Oh, it still hasn't come out, that's why. I was on the wait list. Excuse me. Yeah, it's a good idea. Oh, it's about execution, you know. How well they can execute it, and they're not quite the first in the market with this, I don't think. But doesn't mean they couldn't take market share. Being the name that GameStop is.
Which has been running up with oil itself, has recently hitting some new 52-week highs. Why is this one on your radar, and how do you feel about the company and the stock?
Well, overall, it's been one of the strongest performers in the sector year to date, and just the general trends, and also the positioning of Marathon relative to some of the other oil companies. The integration of the company, is something that we certainly look as a favorable position within the oil sector, and it is included in one of our strategies as well, the Essential 40 strategy. It has been for the last year. It rolled in there as a positive trend in the sector. So I do think that when you look at the general trends, Nicole, that we're going to continue to see upside. It's up about 2% today, so it's even moved since I looked at this trade example this morning. But overall, I do think that when you look at the oil sector, MPC is one of the premier names in the sector.
So let's take a look here at the chart. Rick Ducat, your thoughts?
Well, definitely a strong trend in this name here. We're up like 48% since we carved out these lows near the end of May here. Since then, it's just been up and away. A strong upward trend line here. We saw a bit of sideways consolidation near this level, right around here, near about 143 or so. And
yeah, I lost some respect for RC when he tweeted that with no explanation now.
So since then, though, we've found a stock.
It seemed pretty childish.
The stock here is in a little bit of a breather, a little bit of sideways consolidation, a rather narrow range that we've established from 151 to the downside, our green line here, 158 to the upside, matching up mostly with our highs. We did have some intraday highs.
Bounced around GNS on that 86 cents.
158 seems to be the mark to watch to the upside here. This morning, I was a little concerned. It it looked like perhaps we were slipping below our upward trend line here. We opened below it, but we've recovered nicely. We're up more than 2% on the day now, back rather comfortably above that trend line there. The overall shape, kind of more of a
no, I think there's definitely a market there.
Trend lines, one going across the lows, one going across the highs.
Marketplace,
toward each other here.
buying and selling.
So that's kind of the general
digital
shape
assets
to be on the lookout for.
you can use on,
see that there's some
not even use on
appetite
different
for
games, even
trading
if it's
at
just the
these
same game.
elevated levels.
But if
Got
you
a
carried
nice
over to
volume
different
node
games, that
forming
would
near
be
the 155
insane.
level, suggesting relatively heavy trading here. One thing that did give me a little bit of pause is that momentum is waning here. The RSI, our measure of momentum, we had a peak here that was quite high. That was above 90 here. And remember, RSI goes from 0 to 100. 100 is the maximum it can be. So a reading of above 90 is very significant.
For 30
but we
calls,
trended
nice.
downward from that point.
We've got PAL after hours, so might be waiting for that.
Here, but we're not making new highs.
I'll get calls on the break of this up
RSI
channel.
relative to our new relative highs in price here. Is that a cause to head for the hills? Not really. It's just kind of describing that what we're seeing is a bit of a slowdown in this uptrend. Does not mean we're in a downtrend, just rather that the uptrend is slowing, taking a bit of a breather here. So if you're more bullish, the 155 level stood out to me. That's
somewhere down here, maybe this neckline,
area.
this head and shoulders.
The point to beat is 158, 159 to the upside. If you're more worried about the downside, 151 matches up with our 21-day exponential moving average. That's our lows and the start of this small gap here. So we've got a few things to consider based on that. And then beyond that, 143 based on our volume node would be another place to look for further support.
All right, Rick Duquette, thank you for that. So look, is this thing running out of steam or not? Dan, I mean, that's really what we're looking at.
You called it, sir.
This chart. Where do you think it could head? What would be your
got a resistance line there at 4.6.
Yeah, Nicole. I mean, yeah, there is some consolidation here right now, but overall, the general trends I still think are in place, and I think it's just working off some of the, the recent upward bias. And but I do think that when you look at the general trends in the space, and oil continues to maintain this upward trajectory, that Marathon's going to benefit. So what I looked at as a trade example is buying a call spread in November. So looking 50 days out.
GameStop bounced at that 16.5.
175 call spread. As Rick pointed out, 155 is a key level, I think. If we break above that 158 level, that 175 definitely comes into play. You can buy this for about $5.40. Well, you could. It's higher now since we've rallied in the last hour. But overall, the couple things here. Defined risk. So if we do see a pullback, at least you have defined risk in this trade. And also the ability to capture upside momentum if it continues to trend higher over the next 2 months. And I gave it a 2 months lookout as far as 50 days out to give it some time for this name to consolidate and also most likely, I believe, find a higher price action.
Yeah. All right. Let's turn our attention over to Cintas.
Yeah, you might get an exit stay on it. I don't know what you paid for it, but
still down about 4% this week, but is seeing organic growth when it comes
we've
to
made the
Cintas.
cup and the handle.
Now
we're just kind of hanging around the highs.
2-week high, but has been since pulling back.
Oh, my thoughts? Oh, sorry. Sorry, Nicole. I think that's the reason. If you look at this stock for an extended period of time, that it has been one of the strongest performers really in the equity markets over the last 25 years. And historically, on any of these types of pullbacks, it's a time to kind of accumulate, potentially gain some exposure. So that's
you're not just chopping around, which it might be. It's almost 12.
Seen it come off
You close in
that 480 level
10 minutes.
today. It's trading 485 half, I think. So there is some upside already starting to be put into the market and on this pullback. And just really, when you look at the earnings overall, pretty positive across the board. So I think just kind of got pulled into the general selling in the market here. And I think it's an opportunity to participate to the upside. So I think that's why I looked at this name today.
Okay. Your thoughts on Cintas at 484 today, Rick?
Well, definitely some strong performance from our yearly intraday lows, up about 30% from there. But some trend interruption here. Take a look at this uptrend line, this white dashed line here. We
New high today. They're on SPY.
We broke below our yellow 21-day EMA. We broke below our orange 63-day EMA. The moving averages themselves have shifted from sloping upward to sloping downward here. Now, our long-term EMA, our purple 252-day EMA, still trending upward, but kind of looking a little
Last
more
little move
sideways
before the
as
chop
well.
hours.
I think it's important that, like
Perhaps.
Dan said, we held down to that 480 level. 478 was the more specific level that I had my eye on based on those old highs there and some lows right there. So that green dashed line there, we really want to see, if you're bullish, a hold of that line. And we did break below it yesterday, but we recovered and closed above it. So now we're improving a little bit today here. Looking at momentum, more tilted toward the bearish side here. We crossed below that 50 midline.
Top of that 100
we did
channel
not
now.
make it into the oversold
break
area,
that.
which was a good sign for the bulls here. That's what you want to avoid. That would be a sign of further weakness. That would be a bearish signal here. So now the question is, where do we go from here?
It's breaking it.
If you're more bearish in this name, if you're worried about things taking a trip to the downside here, 478, like I said, is the point to watch here. We've also got this area right here, 458 to 463. 458 would be our old lows here. It's this light green dashed line. And then we've also got our purple 252-day EMA near about 463, 464. So that would be a significant source of support to be on the lookout for. If you're more concerned about the upside, if you think that, like we were saying, if the earnings were good, if you think this is just kind of a momentary reset here, this is the mark to beat right here. The confluence of our orange 63-day EMA and our trend line coming in around, around 495 or so. Beyond that, we've got our 21-day EMA near 500, and then the yearly highs are the mark to beat from there.
Okay, and so at this point, Dan, quickly, just your trade, where you think this could be headed.
Yeah, so what I'm looking at in this trade example, Nicole, is I'll buy right, just due to the fact that it's a $480 stock, and you look at the options, it's expensive to play this name in the options market due to the fact that it's a pretty expensive stock. And so I'm looking at a buy right trade example. So basically buying the stock here in this low 480 level, and then writing a Jan 520 call against that. You could do that for about $10 a little while ago, and so basically again that lowers your break even down to the 472 level, let's call it.
Probably close one of these calls.
In doing so, it plays
right
into
up.
where Rick pointed out some support underneath this market, but also allows you to capture and move back to the highs, and also moves any potential tax consequence into the next year, and that's another factor why I chose that January option.
Okay, and last but not least, Micron, which came out with the numbers. It was really the loss of the guidance loss that overshadowed some better than expected earnings overall,
Right.
Dan. Your thoughts on
Hold 'em.
Micron, which is pulling back about 2.5% today?
It is, but it was down almost 6 just after the opening. So that's the factor here contributing to why I looked at this as a trade example on selling a put just with the possibility of getting put in the stock, and if not, then capturing some return versus the stock. And then because of the down move that we're experiencing right now, I do think that we're going to find some stability here. And I do think that if you were able to get put in the stock around that 62 level, that's right around the 200-day moving average. So that's the reason I chose this trade example today. And looking at Micron, I think there's an opportunity to play for potential capture a premium, possibly getting put in the stock at a better level.
Okay, what do you think here, Rick? What kind of upside do you think this has?
Well, this is a shape we've been seeing a lot in big tech names lately. I've been calling it kind of a lopsided triangle. We've got a longer-term trend going across the lows, a shorter-term trend starting with the highs. So kind of giving us this mismatch, this tension between these two competing trend lines here. But recently, we had a bit of an upside breakout. It was interesting as well because we did not take out our old previous highs near 72. We faltered there and eventually dropped back down within our lopsided triangle. We're breaking through our moving averages similar to our last chart. Broke below our 21-day, broke below our 63-day. Both of them are starting to turn downward here. 64 is the key level here. That's a point where we topped out many times back over here. You can see here, here, And several times there, that was a stopping point for price. Old support can become new resistance and vice versa. In this case, old resistance becoming supportive here. We've also got other things lining up at this same level. We've got a support confluence. We've got our trend line. We've got our purple 252-day EMA all around the same level. So if we break through that level, that's a bit of a dangerous sign here, but the 62 level stood out to me as well. That's those old lows from recently during our last downward move here. That would be a support point to watch. We've also got our volume profile point of control just below that here. Momentum is a little bit tilted toward the bearish side of things. We're below that 50 line here, but you know, we are recovering a little bit from the open here despite the big dip to the downside. If we do get continued upside, if things start to get our act together and resurge back to the upside, our moving averages right here. 63-day near 67, 21-day near 68.60, and then the $70 mark wraps up the resistance that we might see around that area.
Okay, Rick Ducat, thank you for all those charts there. Quick, Dan Deming on the trade. Where do you think Micron's headed?
Yeah, so Nicole, it was, you know, we did see Micron much lower earlier in the session, and so I was looking at that 62 level that Rick pointed out. So I was looking at a short-dated trade here for the trade example, selling a 62 put. You could have done that for just over $1 here, close to about 2% versus the stock over the next 3 weeks, with the opportunity to get put in the stock right around or just below that 62 level. And I think that is a good place to pick up the stock should it get down there. If not, then you get to collect the 2% versus the stock over 3 months or 3 weeks, excuse me, which I think is a reasonably good return if you extend that out on an annualized basis.
All right.
Q's are closing the gap.
Big three today.
Yeah, I think they were kind of ahead.
Dan Deming of
They were more bullish yesterday, weren't they?
Ducat there on the charts. Thank you both very much. Coming up next, let's take a look at some key names to spotlight. Lululemon, Peloton. These companies announced a partnership that has boosted Peloton stock today. Let's get some more details on that. We'll be right back.
Closing one of my calls here. Put a stop on the other ones.
Binge watch the
It's all pop there on SPY. Oh, going. Could have held longer. Back into the squeeziness of yesterday. Next gap is 430, 82, 431, 431.05. Guess I should have held to the top of my channel. Nice, Mark. Well done, man. AMC woke up a little bit with that. It's now green 0.5%.
Target price is $90. We do think it's a buy. This is a good buying opportunity. No doubt there are macro pressures that are constraining the affordability of used vehicles and many other big ticket discretionary purchases for consumers, especially lower end consumers. But CarMax has pivoted its business and pivoted its inventory to appeal
Mark. Well done, man.
to those affordability constraints. And that's going to help them win market
$500
share
on a
going
sick day.
forward.
That ain't bad.
Right, understood. So as we look
Sorry
at
to
this,
step out for a minute.
coming under some pressure today,
Spy's still
there
going.
may in fact be some
Hardly any pullback.
opportunity. David, what are your thoughts here?
You know, we're long-term oriented investors, so we don't look at the name quarter to quarter or even year to year, but over the next 3 to 5 years, I would
Or for that
agree
gap
with
fill.
everything your guest
Should have got
has
more
said.
calls down here.
We think this is an extraordinary
Wait for the pullback.
retailing business. The market's moved against them a little right now. Typically, there are about 40 million used cars sold in the U.S. every year. Best estimate this year is probably going to be closer to 35 million. So they're taking it on the chin just like everyone else. But when you look back over the last 3 recessions, you see that it's taken anywhere from probably 2 to 6 to 7 years to get back to that $40 million cadence. When that happens, CarMax will have $2, $3, maybe $4 of hidden earnings power that come to light over the next 3 to 5 years that aren't reflected in this year's earnings. So we really like the stock at this price and this setup because we think there'll be mid to high teens compounding from this level going forward.
You noted that you could see doubling in its market share as it has further penetration in the United States. David, when you broaden it out in the big picture, you talked about the cyclical downturn overall. I mean, how does the market fit into a name like this or others, David?
Well, it's going to be very difficult to own it quarter to quarter if you're just trying to trade around the name. We don't spend our time doing that. We're looking for businesses with secret sauce, some special competitive advantage that we think is sustainable and will allow it to grow their earnings at an above average rate for a long period of time. And we're very encouraged with what CarMax is doing operationally today. Very encouraged that they've reinstated the buyback and very encouraged about its future prospects.
Yeah, Seth, how do you feel about some of the other names, or when you look at what's going on in autos, or how the consumer spending habits are going? A lot?
Sure. This is what I classify as one of the biggest ticket discretionary purchases that a consumer can make. The other key category that I cover that reflects that is mattresses. And both of these sectors I would classify as early cycle. So stocks tend to move ahead of the change in trends. And as we get a bottoming out here of trends in both of these sectors, I think the stocks will start to move. So I think we're on the verge of that over the next 3 to 6 months. Right now, we are facing pretty significant headwinds on that consumer discretionary spending power, but we don't think that they're going to get a lot worse, and they're going to lead to a bottoming in trends and move higher in the stocks.
Yeah, so mattresses, names like Tempur-Pedic and Sealy and things like that, is that what you're talking about, Seth?
That's exactly what I'm talking about. Tempur-Sealy is our top pick within hardlines. The other name that I would classify as bigger ticket discretionary that we like is Wayfair in home furnishings.
Ah, okay. And Wayfair. I'm just writing them down because I like to look at them later. David, what are your thoughts? You had some other names here. You had Encore, Markel, CarMax was on there as a name you were watching. Tell me about some of the names that you do like here.
Well, so Encore is the largest purchaser of charged off consumer receivables or credit card debt in the country. We think it's an exceptionally well business that should be counter-cyclical in here. That is, as the economy slows a bit, as delinquencies, 30 and 60-day delinquencies normalize, as charge-offs pick up, Encore finds a much better purchasing environment, particularly for its forward flow agreements. So they had exceptional collections during the pandemic, and we think the market's poised to come their way over the next year or two. Markel is a specialty property casualty insurance company, often referred to as a baby Berkshire. We think their business mix and investment philosophy are similar to Berkshire's. It has a niche business, lots of pricing power, superior underwriting, and just a great management team.
Yeah, I see Carvana, by the way, up from an underperform to a neutral, so I did want to bring in the Carvana part of it. Seems less popular than CarMax today.
Closing this last call.
Thank you both, Seth Basham.
See if there's an opportunity to re-enter.
Thank you both very much. Good to see you, folks. Thanks for being with me every day at 11 a.m. and 2 p.m. right here on Schwab Network. I'm Nicole Petalides. Thanks for watching Trading 360. I'll see you at 2 o'clock for the watch list. Fast Market is next.
Yeah, I did pretty well. Of course, I wish I had bigger position sizing. Trying to save buying power for trading all day on this account and not just blowing it all in the first couple hours. So, had a good setup though. Bought right here on this channel break. Excuse me. I'd been in and out of calls today though. I'd already been in and out a couple times. Got stopped on, made profits and just put break-even stops on the other ones. Then I got stopped out. So profits weren't as big until this one was a pretty good move. I closed my first one right here. Or where was it? Right, like right here. I just closed my last one there.
But before we get to our guests, before we bring in Jenny Horn, let's take a look at the 4 major indices and see where they sit at 11 o'clock Chicago time, 12 o'clock Eastern. The S&P 500 up 13/16%, 35, almost 36 points to 4310. The NASDAQ 100 up 1.2%, 175 points to 14,753. The Dow Jones Industrial Average up 0.5%, 184 points to 33,734, and the Russell 2000 up 1.1%, 20 points to 1798 and some change, almost 1799. All right, now let's bring in my co-host for today's show, and that is the Director of Derivatives Analysis at the Charles Schwab Center for Financial Research, Mr. Nathan Peterson. Nate, thanks for coming on the show as always, spending a couple segments with us. Interesting way we're ending the month here so far. Pretty strong, nice bounce off the lows yesterday. Little choppiness early morning, now follow through. All of a sudden, things don't look quite as bad as we get to the end of a horrible, consistently bad September, Nathan.
Yeah, last week we dropped 2.6%, and if you look at what kind of caused yesterday's bounce, because yields remained higher basically throughout the day on the 10-year, and we did see that intraday bounce. And while I was kind of looking around and saying, scratching my head, what's going on with the buying there? If you look at the RSI on the S&P 500, we did dip below 30 yesterday. Couple that with the VIX, it was around the 1920 area over the past 6 months. That has been a place where markets have found some kind of relief, meaning a mean reversion type of a bounce. And Kevin, you know this, but the VIX isn't that great at predicting when we're going to get a sell-off. But when it does spike up like that, that can indicate when we get to a near-term extreme and we might be due for some type of a relief. And it looks like that helped as well. And then throw in the 10-year as well. And why do I say that? Well, the RSI on the 10-year got up to 74. That was an 11-month high. And as you get stretched like that, in the event that you get those yields to turn around like they are doing today, that's just adding fuel to the fire. So all three of those things put together, it looks like that's creating some type of bid support here for the markets, at least in the near term.
Yeah, and we're coming to the end of the month. We're coming to the end of the quarter. We've got a big data point tomorrow morning that's supposed to show, if the consensus holds, that core PCE year over year is going to drop from 4.2 to below 4% is what the consensus is. We'll see if that happens, but that could be another reason why end of the month, end of the quarter, maybe a little relief print in some highly watched economic data, Nathan. That could be a reason why people are starting to nibble on a clearly oversold couple indices. But before we get to more talk on the overall market, let's bring in Jenny Horn. She's going to talk about a name that came out with the earnings last night. It's still down on the day, Jenny Horn, Micron, but it's significantly off its lows, Jen.
Kevin, and I will say that for somewhat of a mixed picture that has been described as their earnings, I mean, a 2% move to the downside isn't like we're seeing a massive day of selling by any means. We know from this market, post-earnings moves can see a lot more volatility. So this one, not too bad. They did guide for a wider than expected first quarter loss. That did trigger some concerns of this sluggish recovery in their data centers market. The recovery we've talked about in the bottom in some of these markets has been very difficult to pinpoint for Micron over the last year. But we did see shares, tumble. They are preparing to ramp up production of their new product lines. They also revealed they're working to become a supplier to NVIDIA. But even its better than expected top and bottom line in its most recent quarter were overshadowed by that first quarter loss. And again, a later than anticipated return to positive gross margin. So that is something I'd say that the fact that we're not seeing much of a bright spot in the midterm is a bit of a concern. Now, the CEO did lay out the different cost and supply measures they've taken throughout fiscal 2023 to then better prepare them for 2024. But I just think if you give some disappointing guidance, that's not enough to offset some of the more positive commentary regarding the long term for your company. They did also say that now, fourth quarter revenue was around $4 billion. This beat street expectations. This did mark a 40% drop due to the security review by China's Cyberspace Administration, narrower than expected non-GAAP loss for the quarter. So the mixed picture. I mean, there were things that could, I guess, excite you about some recovery. There were things that would make you say the recovery is going to be a little bit longer and a little bit more painful than anticipated. All in all, the street is very much echoing that sentiment. I saw a lot of analysts just maintaining their position, which was actually fairly positive. Citigroup maintained a buy rating. Baird maintained a neutral rating. Rosenblatt kept a buy rating. So analysts are just sort of sticking put here. And I will say that Micron shares into today's open were up 35% this year. So it still has seen some strength, just difficult to compare it to the heavyweights of its sector, like an AMD or NVIDIA, of course.
Hey, Jenny, I would imagine most investors are probably focusing in on that NVIDIA news. If that announcement came out, back in May or June, that would have put, a nice boon to the stock there. What do we know about that? Have they inked anything? Are they just talking at this point? Do they have other memory providers? Is this a new relationship? I don't know. Do you have any details around what this might entail potentially?
Yeah, so it's really interesting actually, because I have found, of course, I as well as the rest of the market have found the NVIDIA narrative so interesting. So specifically, when it comes to this relationship, increasing the demand for their high bandwidth memory chip usage for AI, this market is led by NVIDIA. So there is the hope that then they could sort of ride some of these coattails. NVIDIA is dominating the field of chips, of course, that's crucial for AI development. So right now, the AI market is expected to really continue to be led by NVIDIA. Regarding that partnership, we are seeing the fact that they are expected to basically just sort of coincide with each other, which I find very interesting, because a lot of times we talk about some of these memory supply names as if they're all competing. But to my understanding, they will be utilizing some of the technology that NVIDIA has already built out for AI specifically, then regarding some of their various memory chips. So I always like when these companies seem like they're working together as opposed to stiff competition, because they are all very different. They all have their respective strengths. NVIDIA just has a leg up right now in building out that specific AI framework.
Yeah, it's interesting, Jen. It's almost as important now to link yourself to AI as it is to link yourself to just NVIDIA in general in terms of relationships and making your stock feel better. But Jenny Horn, thanks for coming on, as always, spending some time with us. Have a great day, Jen.
Thanks, guys.
All right. Now, Nathan, back to our macro discussion, because I think this is a great place we find ourselves in right now in the market, because there's a macro story out there. There's a technical story out there for this market. There's an end of the month. There's an end of the quarter. There's a lot of reasons for heightened attention on the overall market. The economic data today, first, I want to get your thoughts on the personal consumption expenditures part of GDP. This was the third look at second quarter GDP, and suddenly out of nowhere, we get a huge correction in personal consumption expenditures from 1.7% down to 0.8. Give us your thoughts on what that meant for that to be adjusted so significantly down, Nathan?
Well, it's tough to say. There's been some signs that there's been some cracks in the consumer, some cracks in housing. I think one of the big questions out there, of course, the market is contending with is, if the Fed goes higher for longer, why would they go higher for longer? Because inflation's basically not at their objective yet. How long does that take? Is the descent or the trajectory of the descent okay with the Fed, where they don't have to be too aggressive? And if it's higher for longer, is this going to continue to be kind of like those leg weights, on a jogger in terms of the economy in constricting growth there? And where does that show up in terms of EPS and corporate earnings? This is the whole narrative that's going on. So you mentioned PCE. That's going to be an important one tomorrow. And if they do come in below estimates, that's great. But then if you look at that versus their long-term target, they still have some work that needs to be done. So, I'm hearing some more commentary around potentially that stagflationary comment. We haven't heard that since basically last year. And if that is going to be the case, then the Fed's going to be in a really difficult position. So we'll just have to continue to monitor the economic data and see if there's evidence that all of these rate hikes that the Fed has been on is taking its toll.
Nathan, when you're looking at this market today, how the setup is, you've got yields that are lower. You've got the dollar that's lower. You had crude oil hit $95 and now it's down on the day. Is that fueling part of this little bit of relief rally here? I mean, from late morning yesterday to today, this has been a pretty nice little comeback here in this market.
Yeah, Kevin, I think this is basically just a technical bounce, so I wouldn't get too excited just yet because we do have issues. If the let's not forget the 10-year hit a new fresh cycle high today.
Yep.
So we can't overlook that. On the technical side, we may be doing what's called basically a pullback up to the 43.30-ish level. So we basically had a head and shoulders type of a pattern over the summer that developed. 43.30 represented that neckline. We broke that last week.
AMC's up 2% now. Look at that.
Accelerated selling. The RSI got a little bit oversold. We're seeing somewhat of a technical bounce back here.
Maybe a double bottom
We
here
could
at
rise up
7.3.
to that 43.30, but if this is indeed a bearish break
There's enough
of
liquidity
that
for the bulls.
neckline, then the
It's busted out of the
would
top
be
of the
that
wedge.
We're going to resume the downtrend. So I don't want to get
Big
too
is up almost
excited
10.
over
Look at
today's
that.
bounce, although I'll take it. It's nice to see some green on the screen, given what we've seen over the past couple of weeks here.
Yeah, but you're right. I mean, you've got a 10-year that was clearly in the overbought category. You've got, I believe, 3 of the 4 indices that were oversold. You're having a nice day today. How important is this personal income and outlays number tomorrow as we look to next week where we'll get jobs data?
Well, you know, it feels to me, Kevin, like the inflationary story is that it's on the right track. The Fed is going to hang around. The expectations for potential rate cuts continue to get pushed out. The bond market is signaling that by the higher yields that are there. So I think the inflationary data is not as important as it was, let's say, 4 to 6 months ago, meaning that I think the narrative is that inflation is on the way down. It is going to decelerate. We're going to benefit from the base effect on those year-over-year numbers. That will continue to get better. But the question is just basically how long is the Fed going to hang around this level, and what, if anything, is going to elicit them to cut rates? And if something does elicit them to cut rates, is this going to be something that is showing up as negative within the economy? And so what does that mean for stocks? So we've got some stuff to work through here, Kevin.
We have painted ourselves into a little bit of a corner here, Nathan, that's for sure. But finally, you do have some Fed speakers today. You've got Austin Goolsbee. He's already spoke. You've got Lisa Cook coming up here at noon Chicago time, 1 o'clock Eastern. Jerome Powell speaking later this afternoon. He may take some Q&A. He has been consistently on point. He has not wavered from his Ben Bernanke-like approach to things you do with interest rates and things you say in interest rates. I don't expect any of the Fed speakers to stray away too much from, remember, we had Neil Kashkari talk about one more rate hike this year and then one rate drop a year for, during 2024. It looks like, it appears to me like Jerome Powell thinks he has rates at a restrictive enough level, but he needs to see some work, right? And this PCE number, this year-over-year core PCE, might just be that answer. But are you expecting anything from Jerome Powell today? Is that a market-moving event?
Probably nothing out of the ordinary. I think, to your point, he has been very clear about sending his message, and he's been consistent about his message. It's the bond market that continues to kind of doubt what the Fed is saying, and they don't believe that he's going to basically be as restrictive as he's conveyed there. But the dual mandate is healthy employment and price stability. So he keeps pointing to those two things. And you mentioned the jobless claims. We did 201,000 last week, 204,000 this week, but the estimate was like 215, which kind of speaks to that tight labor market. We've got the strikes that are going on, which likely aren't going to be good for inflationary wage growth there. So, I think the primary focus for the Fed is those inflationary numbers. They're not at target. Secondary to that would be the employment, meaning that employment stability is good. To have a healthy employment, he just wants a little bit more slack in there, but we have not seen evidence that is showing up. So do we need to see employment get to enough slack to where the Fed is going to be okay with that? I don't know, but I think right now it is just basically about primarily those inflationary numbers getting down to their target.
That's going to be a great segue into our next segment where we talk about Tesla. Let's take our first break of the day and come back with a discussion on Tesla, a stock that has about an $8 or $9 range so far today. So take a quick 2-minute break, come back with more Fast Market. See you then, everybody.
I want to see a bigger pullback to get back into calls. And being that it's midday now, just chop around up here for a while. Not going to be hasty to get into calls. Might be puts for the afternoon. Let's see. He's breaking that channel there. I'm gonna chill on it. Maybe getting a little double top up here. I'm not getting puts yet though.
Volatility.
Yeah, don't blink if you're looking at a price level or in Tesla. Nathan, here's the thing. There was a note out this morning from an analyst talking about the Apple car. And basically the comment was, we have lost all visibility of any hopes of an Apple car anytime soon. So we know that the big three automakers are struggling with electric cars, right? Every time that Elon Musk lowers prices, he inhibits their ability to make money in EVs. There's so much discussion about the UAW workers and their hopes for more employment while the world is migrating towards EVs, and all that is in the South and away from their workers in the upper Midwest. There's so many things that Tesla's putting pressure on the big EV makers. You mentioned the charging station. How about the robo-taxi? How about the robotics in general? There's so many things in the pipeline for Tesla that could make this stock turn around. But right now, it looks like they're
price action is logical
themselves with a little bit
because you think good news just makes stocks go up.
Market lowering some of the expectations. Nathan, are any of these other things a game changer for Tesla?
Well, yeah, it's tough to kind of price, and I think that benefits the stock because it's so tough to price. You forgot, I think, what is it, Neuralink? Is that another one of the the projects? That one kind of freaks me out a little bit, but how do you price that? And I think because it's difficult to kind of estimate the market. I mean, if you think about, a world in which it'll be like Minority Report and you have autonomous taxis and, think of the savings that some of those car companies can benefit from not having labor, but having autonomous, cars going around. How do you price that in? Well, it's difficult, at this point. So I think that kind of works in its favor. But, the margin issue is a concern. Competition is a concern. China weakness is a bit of a concern there. So, again, it's just one of those stocks that commands a premium because of the potential that lies there. And I think investors have largely been very patient with just basically seeing how long it takes for that to show up on the bottom line. But for now, it's going to be about competition, and it's going to be about, does the China recovery come back stronger than expected? China's got some issues there, Kevin, with their, the property headlines that are going around. So the growth in China is one of those markets, of course, that Tesla relies on.
Yeah, I mean, Tesla in China is one of their big stories that could affect the stock positively or negatively. Puts a fear of volatility into that name. Nathan, you brought a trade with you for today. It's a paper money trade, but it looks at Tesla from a bearish perspective. Yes, if full disclosure, it's trading at a better price than it was a short time ago, but give us your thoughts on this Tesla put vertical.
Yeah, sure. So, just looking at the analyst and thanks. This is an example trade.
That
this is not
pre-market move is most likely just algorithms scraping the news.
At what the analyst just kind of going with
Hoping
the
it wasn't
flow,
like
their bearish flow
institutions
this week, whether it's
buying
Baird
or
Deutsche Bank or
retail or
delivery estimates are going to come into
insiders or
get those numbers. Does the market already expect that, or is this going to catch them a little bit off guard? We don't know.
It does. It gives liquidity for the shorts, for the bears.
There, I was looking
Drop it
at
down.
The time at something like a 250, 245 put spread. This was an in-the-money put spread at the time, Kevin. So feel free to, adjust the strikes if you're looking at a strategy like this. And the reason I say that is I just wanted to bring
and
the
that
example,
news
Kevin,
wasn't even. That's not really a catalyst. For to rally. I mean, it's not at least. I mean, he was already acting CEO.
A third of the width to a half of the width.
Executive
Some
chairman.
people call that the sweet spot for some of these spread traders. They may go at the money or out of the money in terms of having a bearish view. I was bringing this to the table when the stock was at 240, looking at the 250, 245 in the money, bear put spread for next Friday. That's October 6th. And the debit at that time was $3.20. And the reason I was just bringing that example to the table is you have, think of the bell curve in terms of the probabilities of where Tesla's stock price can end up by next Friday. And by going in the money, the stock can be flat or go slightly higher. And if you were to achieve that full $5 on that bear put spread, meaning the stock closes at 245 or below by next Friday, then that would represent a 50% return roughly on your $3.25 debit at the time. I imagine that debit is now lower. I'm not sure if you have a current quote there, Kevin.
I do. It's trading right around $2.60 right now, but you're buying, you went out to the October 6th, you bought the 250, sold the 245, trading right around 255 or 260. But Nathan, here's the thing. This is a show based on trades and paper money practice trades, but it's also an education show, right? And so teaching our viewers different ways to look at a put vertical, right? It doesn't always have to be an out of the money or an at the money put vertical. You can buy an in the money put vertical for about $3.20, and if it stays in the money, you make the 180, right? And there's your return on that. So there's all different ways to play the put vertical. There's all different ways to learn about this, and that's what this show brings. It brings trading examples to teach you the different ways to use options. Nathan, final thoughts on a basically somewhat in the money put vertical.
Right. Well,
How can you even go up from here?
you have that Rolodex of bearish strategies.
It's got to come low enough for the buyers to build liquidity, and cheap enough for it to be attractive.
It depends on where you put the strike.
It helps to have an overall bullish market, small cap rallies, short squeezes going on. It'll wake up then, but probably not like it used to. It'll just slowly go up like it does now.
That's the most that you can lose.
There's a new high on SPY. Could have taken that long.
To illustrate, Kevin, basically how you
I'll be pretty sad if it does this whole move again up here.
Wanted to, meaning if you're in Tesla and you short the stock and the stock drops from 246 down to 240, you're going to make a certain percentage gain on that. That's basically what, 3% that you would make on a decline like that. But with the strategy of a bear put spread, if you put this on for 260, it depends on the number of contracts you do, but the percentage gain is where you can see the potential leverage in options. Now, it is a two-sided sword here. We know that on a percentage basis, you could lose 100% of the funds, if you close out of the money at expiration. So that needs to be pointed out. But it helps to illustrate basically
ripping up somewhere there.
How you can use this strategy for leverage, and then it also shows you the importance of that strike selection in terms of putting those odds a little bit more in your favor and getting a lower potential payout by going in the money. Yeah, the debit spent is the risk on this trade. If the stock were to settle in between those strikes, there is risk of assignment on one of them. So make sure you understand the key in between the strikes is such a key part of learning about the debit put vertical. All right, that's enough for our Tesla trade. Now we're going to take our second break of the show. Nathan Peterson has agreed to stick around for our next segment, where Landon Swan will come on and talk about earnings after the bell in Nike. The rest of the show, sports apparel theme for the rest of the show. Take a quick break, come back with more Fast Market. See you then, everybody.
I was born on the south side of Chicago. It's been a long road, but now I'm working for Schwab. I love to help people understand the world.
Dang, I should have left a runner. Just one. I got back into it. Alright. Let the risk to reward get mad a little bit. Happens. I guess there's a gap up there. Could be trying to reach. Pretty aggressive buying channel is in. That it? End up, huh?
popular new brand for gym shoes. But Under Armour? Really? Under Armour? I mean, I'm
There's
a fan
that,
of Under Armour, but
that
sometimes
trap.
I think I'm the
That's the reason I
only
get those
fan
calls.
of Under Armour, Landon. You know, this
12,
stock,
12:30
this company,
chop trap.
they've been through some problems lately. So for them to grade higher than Nike, a little bit.
It did show though a
shocker
less
there.
steep.
Right, and you know what? I
high,
wouldn't have
though.
expected Adidas to come in at par with Nike as well. So, and again, it's slim margins that we're talking about. We're talking about 2 percentage points. It's not huge, but it just kind of showcases that, you know,
It's
just
good. I
as you
think I
opened
will
the
be getting
show,
puts in the
Nike
afternoon.
is all about that, the high quality, the
Or
brand
at some point,
perception,
we break there.
fantastic marketing, and you know, if they're not following through and customers don't absolutely love their products, that can be a bit of a problem, and that's going to just, you know, hit that, you know, armor over time. It's going to weaken that over time as being the number one shoe brand in the world if people just don't love them as much as they love the competition. And yeah, like On Holdings, I mean, their shoes are amazing, and as more, you know, as consumers try these other shoe brands and say, you know what, these are really comfortable, I like these better than Nike, that's going to be a problem long-term for this company. Again, 2 points. It's not the end of the world.
Right.
But if this trend continues and, you know, if Nike gets in the mid-60s, then it's a real big problem. So we're going to be watching that one very closely.
Great data as always, Landon, and a fun conversation for us to have with Nike coming out with the earnings after the bell. You know, any problems that they may be having seems like they're discounted already in the stock, because that stock from an oversold is extremely oversold from a technical basis right now. Landon Swan, co-founder of Likefolio.com. Thank you so much for coming on as always. Have a great day, Landon.
Thank you, Kevin. Appreciate it.
All right, Nathan. So we've got Nike. We've got this stock that the RSI right now that I'm reading live on the Thinkorswim platform is down to a 19.8. That is not oversold. That is extremely oversold. You could almost call that left for dead. Now, do I know where the stock is
You're back
going?
down to 10
Of course
cents.
I don't. Right? If they come out with more weakness in their earnings, more weakness in supply chain, more competition problems that Landon was talking about from Lululemon and On Holdings and these other startup shoes. Nathan, give us your thoughts on what you see here for Nike.
Yeah, I think you basically nailed it, Kevin. And, you know, as an investor, you got to say, you know, all of these issues identified, whether it is, you know, the consumer, the student loan repayment, the prices, the evidence from, you know, some of their wholesalers, Foot Locker, et cetera.
Break these channels. I'm going to start scaling into puts.
Then is it priced in? Is it known? I mean, they've taken the stock down from 125 in May down to basically 89.90 right now. So it's always a question of, is it priced in? So the good news is you can say, with sentiment so negative, that maybe that sets us up for potentially some kind of a relief rally. You mentioned the RSI there as well, suggesting the oversold nature there. That is it so bad that it's good? Is all the negatives so well known that potentially that sets them up for some kind of relief? If there can be, you know, perhaps some kind of bright spots that can be picked out of the data point. Or Kevin, you've seen this before. You might have a company where the narrative is so negative and it's so well known that they report a really bad quarter, but the stock goes up just because it was priced in. We don't know that right now. We're going to know tomorrow. When everything sounds bad and the stock reflects that, it only takes one little thing to turn the tide and make people take a shot. This stock is beat up. But let's get to our trade. So the practice trade, the paper money trade that we looked at, if you were thinking to possibly get long some deltas here in Nike, what I did, I went out about a little over a month to the November 3rd expiration. I bought the 85 call, which is about the 60, between 65 and 70 delta call. And then I went to this week, the 29th of September, and I sold the 94 call, right in line, just under the expected move here. So I did the 85, 94 call diagonal. I spent about $5.90. The break even there is on the screen. It's a little bit, I think, less than that. The stock has firmed up here a little bit. So $5.90 is where it's trading right about now. But this gives you about 35 deltas. If you
tried to buy 100 shares of stock, it would cost you about $9,000 in Nike. So this gives you a less expensive way to play upside move in Nike. It collects data. It's long deltas. It's risk defined. The risk on this trade is the debit spent. Nathan, final thoughts here on a Nike bullish diagonal paper money trade.
Right. Well, this is one of those strategies that you can set up that is risk defined, and it's basically, or it can be synonymous to a kind of a stock replacement for a buy right. And Kevin, by selling that earnings date there, you're getting an implied volatility on your short strike there at 96 versus your long strike is at 35 implied volatility out there in November. And then additionally, after the earnings report, of course, this is a bullish strategy. So you'd like the stock to go up. You'd like to see some kind of a relief bounce. You'd like to see some bright spots that are coming out of the earnings report. But depending on what it does, by having that in the money strike, at least it is today, that you can go ahead and have that have flexibility in terms of converting that and selling another out of the money call next week if you like that. And some traders might do this and continue to just use those weekly options to chip away that debit on your long 85 strike that you've set out there on November 3rd. And it's that IV differential, I think, that kind of stands out to me with going with that expiration date.
36 days till expiration of the Nova options. If you pay $5.90 or in that range, you've got about $3.60 of intrinsic value in that option. So a real good look there at a way to get bullish in Nike ahead of earnings. I want to thank Nathan Peterson for hanging out with us for a couple segments. We always appreciate seeing you, Nate. Have a great day. Coming up next, we'll take a look at the overall markets with Kevin Green, and then George Tillis will stay on this sports apparel theme. We'll look at Dick's Sporting Goods, a very similar chart to Nike. Take our final break. Come back with more Fast Market. See you then, everybody.
My dad was a
I'm gonna get one put there. Definitely early. This is just a scaling in. Small scale. Like 12:45. Time. Good afternoon, Jay.
Our senior market court contributor, Mr. Kevin Green, to the show. He's going to give us a market update and talk about crude oil. Kev, market, nice bounce here and hanging tough as we get to midday.
Yeah, Dick, we are actually seeing pretty much all the sectors in the green. We are still seeing utilities lagging, and that's because we are continuing to see interest rates rise here, and that's really an inverse relationship when you're looking at utilities. But overall, we are seeing some flows going into communication services, going into information technology. And one of the key things to kind of note, yesterday we actually did see some relative performance or strength when it came to the Russell, and the Russell continues to outperform today. That's usually a trend when we continue to see maybe a little bit of a trend into a risk on mode in the marketplace. And now some of the other markets are starting to follow through here. We have the NDX up, we have the SPX up, we also have the Russell up for today, seeing a little bit of a bid. Let's see if it's going to hold. We do have the VIX sitting at around 17. Nice to see that pressure coming down from the VIX, but we have to have a solid close. If we can stay here, we would have a bullish engulfing candle on that candle that we actually had yesterday, which was kind of mixed, did signify potentially
a nice little shoulder here and a head. If you build liquidity from their shoulder,
technicians starting to come in and
we're looking for a channel break to add to those puts.
Crude oil overnight. Remember, when we look at overnight trading in futures, it's often Asia, it's often Europe that took crude oil up to over $95. Now the stock has, or the futures have come down since then. Now down 1.25% on the day, Kev. Pretty interesting crude oil.
Started some starter positions.
Yeah, we are seeing a lot of volatility when it comes to crude.
Pull back.
One thing to kind of know, we did have
back to
some numbers
VWAP
coming out
or
from the EIA yesterday. We saw a drawdown of about 2.7 million barrels, beating the street's expectations. But we are also looking under the hood, and what we actually are seeing is a little bit of pressure when it comes to the Gulf region. We are seeing refining rates coming down lower than what we usually see from a seasonality standpoint, and it is appearing that we are seeing some pressure when it comes to refining, especially as we start to see the supply of sour crude, or that OPEC crude that really is provided to us in order to be able to refine diesel, heating oil, plastics, things of that nature. And when we don't have that supply, it's hard to blend. And you're actually seeing this play out today. We look at heating oil in itself, heating oil is up over 1% in the session. But as you kind of just talked about, crude oil is down 1.2%, gasoline's down 2.3%. And right now, we are potentially seeing a little bit of a pullback. The technicals right now from an RSI and CCI is really showing a bearish divergence. We did have a really big green candle yesterday, but a lot of volume that could also indicate a short-term reversal. Maybe we pull back to around $80 before trying to push higher. But managed money, ETFs, retail traders
AMC came back down,
pushing this market higher as the producers themselves are actually reducing their exposure when it comes to futures contracts.
Back up above that trend though, so that's
Great
good.
Coverage, Kev, as always. Thanks for coming on, giving us the market update, and talking a little crude oil. Have a great day, Kev. Now I want to bring in live from Salt Lake City, Utah, Mr. George Tillis. He's going to talk about our final consumer discretionary name, and that is Dick's Sporting Goods. George, welcome to the show as always. Much like Nike, this is another stock in consumer discretionary in athletic apparel that has been really beaten up, George.
It has. I mean, if you just look at what's going on, at least since last quarter's earnings when they reported in late August, I mean, the stock dumped to the downside close to 40% on effectively earnings results for the company, which were down significantly relative to estimates. Now, if you look at the report itself, and this explains why there's a huge gap to the downside, the estimates for earnings were expected to grow about 3%, but in fact they contracted, having missed the estimates by about 31%. So that explains the big decline in that particular quarter's earnings, while same-store sales for the business were only higher system-wide by 1.8%. If you consider what's going on in the discretionary space, you mentioned Nike. That stock is not performing well at all in this particular environment. We've talked about some of the other retailers like Target, for instance, we talked about in the past week or so, where the discretionary component of their business, which is a high percentage of sales, including things like apparel and furniture, have been weighing on its business. And I think this is endemic of what we're seeing across specialty retailers, particularly those focused in consumer discretionary. You got to think about Dick's Sporting Goods. I mean, it's got private label brands. It sells, of course, namesake brands. It has a wide variety of merchandise, outdoor, indoor, athletic sports for youth, active lifestyle. But I think people are pulling back, and that's unfortunate for companies like Dick's Sporting Goods, where if you look at it over the past 5 years, it had a remarkable 2019 and 2020. especially going into 2021. I went back and looked, and there were some same-store sale comps quarters in the 20% range for the business. Now, I think what we're seeing is just normalized trend growth for Dick's Sporting Goods effectively, especially when it comes down to the environment. If you actually look at the guidance that the company provided, Kevin, on a full basis for the next 4 quarters, and again, this was back in late August, they're basically guiding for about 2% sales growth and between 0 and 2% on same-store sales comps. So effectively,
I left out.
what the company's doing is providing us a baseline guidance, which I think is, again, going to be a baseline until they prove otherwise. And that might be a
slow
situation
playing on that turn.
Nothing for at least the next quarter, if not 2, before there's a potential turnaround in May.
Both those guys and
George,
everything.
we got to run. We're running short on time. Thanks so much for coming on and talking about Dick's Sporting Goods. Have a great day, George.
You too.
So when you look at Dick's Sporting Goods and you look at a potential paper money trade in Dick's Sporting Goods, and you're thinking about doing
down
something,
a little more.
what you have to look at is the potential for a dividend. It's got a 3.76% dividend. Now, dividend's not guaranteed, but if it does, that is a potential candidate for a covered call strategy, right? That's where you buy the underlying and sell the out-of-the-money call. You can see that on the board here. That's one way to play Dick's Sporting Goods. Now, if you wanted to play it from a cheaper level, you could also do the diagonal. Much like we did in Nike, you could do the call diagonal with that as well. So a cheaper way to play it. But remember that trade-off, that learning moment on this segment is if you buy the covered call, you capture the dividend potentially. If you do the diagonal, you do not get the dividend. Now, you pay a fraction of what it would cost. You don't get the same delta, but it's comparable. And when you look at things like this, these are always great ways to compare the two. There you see the covered call strategy in Nike, where you buy the stock, you sell the 109. In both these examples, we sell the 109 call. Then if you look at the diagonal play or the stock replacement strategy, you buy the in-the-money call, sell the 109 call. Again, we went out to November 3rd in this one, and we did the diagonal. Both of these are bullish ways to play Nike. Now, the covered call is about a 65 delta. The diagonal spread is about a 38 delta. So it's different, but it's also similar exposure. One uses stock and a short option. The other uses a long option and a short option. One, the trade-off is the dividend. The other trade-off is the
probably be getting back into it though.
Risk, the lower capital outlay. All right, that's our show for today, everyone. Thank you so much for joining us. For all of us here at the Schwab Network, thank you so much for coming on.
Oh, he almost
and Alex Coffey
messed up there.
Coming up next with Next Gen Investing. Have a great day, everybody.
Next Gen I. How's Kramer doing? If you get a bounce back up, make that right shoulder. Plenty of time still in the day. Come on. Queen Ace call. Raise. Everybody's calling. Somebody else have a 2-pair also? Straight got there. Flush missed. No raises though. They're all waiting on me. Two ways all in. Oh, he did have this straight. Just slowed down one of those. Just slowed down one of those. He got the straight on the river too, didn't he? Yeah, I guess that straight out there didn't have to be so aggressive. I mean, well, made sense to bet smaller with that out there. Could have even checked the river with that straight coming out. Ooh, I would have had a flush. Is he gonna leave now? What?
The iPhone 15 can't get released, right? If that's even true. I don't have one, so I can't verify whether or not they get too warm. But it's crazy to me how this kind of stuff just still happens with so many of these really, really important products. But that'll be a conversation for later. Upvote, downvote today, Jenny. We got names from all walks of the trading world, it seems like. These are we're digging deep.
We are digging deep. Even though we have movement today, I felt like we were very news catalyst light. But we have an eclectic sort of stocks to kick off this show today. We're looking first at GameStop. Now, GameStop did have some news. They elected Ryan Cohen as president and CEO of their company effective immediately. Cohen will not be receiving compensation for serving as their president or CEO or chairman. And mind you, he was made chairman back in June. His duties will include capital allocation and overseeing management. He previously had been the chairman of GameStop several years back, then taking a 9% stake in the company, which was disclosed back in August of 2020, later increasing that stake in 2020 to around 13%. He has been considered relatively instrumental in their overall turnaround. In a tweet he did comment the company is fraught with problems and its high-paid executives had no accountability. So now taking over to see if he can do it better, although I always think a very interesting move that he's receiving no compensation doesn't exactly to me tell me that GameStop is crushing it, which you already knew that based on some of the price activity in this name.
look, CEOs may not take in the cash compensation. They prefer to make their money through stock appreciation. So we'll see what happens. But what I think is most fascinating about this is you managed to find a group of 4 names in which GameStop is moving the least amount. And so that's the most interesting thing on this. I don't have a lot to say. I mean, if you're in this world, in this meme stock world, this seems like a key leader of this space. So maybe he can get things moving in the right direction for GameStop. Next one on the list is Upstart. One of these kind of ominous reports coming out with this one.
I know, short seller report. These
yeah, I'm doing good at it, Jay.
Interesting to me though because they're so
not so good on poker yet,
negative that I
doing well
always
in the
like
market.
to see the perspective of someone that believes that a company will exist in like 12 months. So Bleecker Street Research did announce this short position in Upstart where they see the firm
looking to add to my
having
puts.
many looming issues. They did say the purchasers of Upstart Credit are facing severe regulatory issues and they believe its largest source of revenue could be shut down by the FDIC in the next 12 months. Upstart has, they said, publicly claimed that its AI platform enables it to make superior credit decisions, but the firm does believe this is not true and that the substance behind much of this hype is very flimsy. They believe Upstart is a cost of capital company at best long term with no marketing advantages, no production advantages, no distribution advantages, and in their view, this should call for the stock to trade at no more than 1 to 2 times its $7 per share tangible equity in a normal equity market environment. Also thinking it could trade very well at a large discount if and when the capital markets run into liquidity issues. This is why I love short reports because it's like we always joke that the analysts are non-committed to some of their downgrades or upgrades. They're sort of like speaking out of 2 sides of their mouths. This is such commitment. This is saying this company is majorly flawed and here's why.
Yeah, Bleecker Street not pulling any punches here. I believe this was via the X platform. I see this this tweet. It looks like they say that they're short, and then they say that their largest source of revenue, which they said is Cross River Bank, could be shut down. So, I mean, if that's the case, they say that they can see the stock going to zero. So we've talked about this before. If you're betting against these names that are lower priced, granted, this is in the 20s, it can only go to zero. But if you believe it's going to zero, there's plenty of juice potentially to be squeezed out of here. One key link between all the remaining names on this list, Jenny, a little bit of AI in all of them.
That is very true. Our next name would be, I'd say,
flushy there on
SPY
noise.
Entering into the world of AI. Although it makes sense, that's Duolingo, which I believe it's our first time discussing this name on the show. And to my surprise, stock's up 126% this year on an absolute tear. But UBS says this company can find more growth drivers from AI and higher pricing for its overall subscriptions. The bank did start coverage with a buy rating on Duolingo and a $195 price target. That implies more than 26% upside from where it closed on
bluff
Wednesday.
this guy off.
But the analyst
it's not all in form.
is really this best-in-class
What?
brand, saying that they have the path
You
to
had nothing.
accelerate engagement and
Absolutely nothing. Roll the high card.
trends by leaning into generative AI-driven
What
content
the-
creation and driving a 29% subscriber compound annual growth rate over the next 2 years. They did also note some optimism on their future subscriber monetization through their company's family plan and their max tier, which is a premium to its relative tier. So
Already hit
seeing
check.
not only
Can't
more
uncheck
customers,
the
but
check.
more customers paying more, which is always a good thing.
Oh, I did call
when you
any
operate under a subscription business model like they do. But again, this name has quietly been such a nice performer. We're up 149%
What the full house?
here off our 52-week lows.
Yeah, this is the star of the bunch today, up about 3.5%. So a nice move in this
Even
game.
Jason Statham didn't like that hand.
Honest about it, Jenny, this is not one that's been on my radar, not a name that I follow very closely. But Duolingo in that kind of language learning model space, this has been all the rage. So we'll see if they can be a
No,
better
not Jason
player going
Statham.
forward. Calling themselves
Jason
best in
Stamos.
class. We'll see. And the last one on the list, though, this is the one bringing up the rear today. So really getting walloped, down almost 10%.
And that is Workday. And so these names, what I would say, actually one also tie between all of them is they all have a decent amount of short interest. So a lot of people, obviously, especially today, I mean, a lot of people selling today in Workday, but Workday did outline a new 3-year target, shifting growth
So messed
down
up. Once
from
I hit
20% plus
check, it won't let me
subscriber growth,
uncheck.
which they saw just a year ago, to now calling for around 17 to 19% through fiscal 2027. So pretty long-term target there. They did maintain the 25% operating
Oh, I never got those
margin
puts.
guide,
Never mind.
lowered their free cash flow guide,
Never
and
went through.
we are seeing this
That's weird.
fact that they do remain confident in their business
How
and
did that happen?
confident in the margins they're serving.
Guess
but
that's nice.
analysts, a little bit less
Let
than
it bounce a
positive,
little bit.
obviously, I mean, with this move to the downside today. Barclays lowered its price target, did keep an overweight rating, saying that this analyst call, which is where they disclose this information, will create many discussions now for investors. On one hand, the customer conference clearly showed strong momentum. However, the mid-tier numbers they said were lowered, which then raises questions. Citi also reduced its price target while keeping its neutral rating, saying they expect that right now with the outlook to be disappointing, a portion of this macro and conservative really guidance going forward is going to be something that's continued to be factored into their share price. And BofA also reduced its price target, saying that now they see a healthy degree of conservatism built into shares, while also
maybe now we'll get the retest on the shoulder.
They weren't necessarily as negative as the other two, if you could call it that. I mean, the other two are pretty much neutral, if not hold ratings. But this name, now with this move lower, we are down 16.5% from our high. More notably than that, down 9% this week alone.
Well, 9% today alone, when you think about it. But when I look at this name, I think the story's clear, Jenny. We're talking about a pre-profitability company. What's the only thing that gets investors excited when you aren't actually turning earnings from their dollars? Well, it's growth in revenue. And so they say 20% plus, comes in 17 to 19%, assuming they reach those levels that they highlighted. It's disappointing. Growth is slowing. It's not keeping the pace that investors want to see. So there's just a repricing taking place here today. Think of this as an earnings announcement.
Yeah, and I think that's, I mean, we're basically seeing shares move as if we are tied to a major earnings catalyst. That's a good point. I actually thought they might have disclosed earnings based on the
I have to call that, don't I?
Market, but we'll be diving more into our upvoted names, those being
Upstart
as well as Workday. Just maybe perhaps more stable, although I guess not today given the selling we're seeing in Workday. But we'll be looking at some technicals as well as key example trades in both of those names. Stick around. Next Gen Investing, we'll be right back.
Win me, buddy. Who's going all in? I've done it before now. It's just not a way to play this passively. Yeah, the straight from the get-go. Oh my gosh. Well done, suckering us all in there. Alright, now I got another put. Actually went through. That wasn't a good idea, actually. Just kind of inverse head and shouldering and showing some line of support here. I just check that down. Right on the edge. Guess I could have called that. It wasn't a huge pot. Curtains. The heck?
To assess where we might find some support and resistance and kind of try to figure out what to do with this thing.
You know, Rick, I will say that this is a pretty ugly chart the way it gaps down, but the way you have it lined out, it looks like the Eiffel Tower. So that's maybe one bright spot to look at here. But as far as momentum goes, what are you seeing? I have to imagine it's to the downside.
Eiffel Tower is a lot prettier than this thing here. I tell you, this is quite an ugly chart for anyone bullish in this name. And we can see that I thought it was very curious here that the way momentum was behaving according to this RSI study. Despite these big declines, we never actually made it into the oversold area. I thought that was very weird, especially because we even after our big initial decline, we've continued to make lower lows, but RSI has held on. Now, to be sure, we are bearish on the RSI. We are below that 50 midline, and RSI is making lower lows.
I'm letting myself get into that midday chop.
Just by the fingernails, you know, hanging on to that 30 level
out of all
in
my
the
positions
RSI
right now.
and avoiding that further bearish signal here. So pretty interesting action here for this particular indicator here.
Breaks this channel, I'm going to close these puts.
To be on the lookout for trend to improve as well. If we start making our way back upward, if we cross above some of this resistance, look for a cross back above the 50 level. That would be another bullish signal and, you know, a potential warning sign for a trend shift for the bulls.
I don't know what I'm playing over here.
This volatility this year, it's ridiculous to me that we traded
Repair?
at around
Well
$12 all the way to around 72. I mean, the range in which we've seen price just over the last 12 months is ridiculous. So as far as support and resistance, where do you even start from here? I guess just given some of the recent trend that you pointed out.
Thanks for 10 more
Great
chips.
question. Try to look for highs and lows, and we can also include our volume profile study. And this shows us the areas where we've seen heavy trading. We can see right around this 30 level, we had a bit of a spike in our volume profile here. And the $29 level, like I mentioned, that's the resistance point to be watching. Old support becomes new resistance. This red dashed line here where we carved out some lows. If we were to make our way up from that point here, we've got our 21-day EMA pretty close to our upper trend line there. To the downside, the 24 level stuck out to me, and let me backtrack a little bit just so you can see why. We can see here that was an old high close from all the way back here, and that was a point of some brief consolidation, and where price hit lows after breaking above it. We went back to retest that area. So 24 to the downside could be another important price level to watch if you're bearish in this name, or even if you're bullish, that could be the opportunity to sell a put or something like that. Just below that as well, volume profile point of control near like 1840. That could be one other significant line in the sand.
Happy to go all in.
And I think that all indicators are pointing to this negative price activity as well as this pretty negative short report we got today. So Alex, trading this name here, I have to imagine we're leaning more bearish today just given the overwhelming bearish evidence as far as technicals and the story.
Yeah, again, it may be end up being the truth from that research firm that bleaker in terms of the stock going lower. It may not, but I looked at a bearish trade example, trade illustration here just to line up with that, and of course the technical picture quite bleak as well. But looking at buying a put vertical, basically at the money here, one strike's in the money, one strike's out of the money, looking for downside as this is how this one would capitalize. What we're looking at in particular, October 27th, so it's a weekly cycle, buying the 29 strike put, selling the 26. Break even in that case, if done for $1.50, would be at $27.50. So a couple things. We talk about this all the time with these debit spread trades. What are our loose guidelines? Well, equal risk to reward. We see that up here in this corner, 150 and 150, and then break even at a price near the current share price. Well, right now this stock's trading at $27.80 or thereabouts. $27.50 would be pretty good, if not almost right in line with the current share price. Risk profile elongated Z, pretty straightforward. You want the stock to go lower, it goes below 26. Best case, max profit goes above 29. Worst case, max loss, Jenny.
Yeah, and I think that's well put in a way to play into some of the weakness while also being, of course, risk defined here. But now to shift gears and look at Workday, which is another pretty precarious situation, Rick. So walk us through what you're seeing.
Another steep reversal of fortunes for this second chart that we're looking at here. We can see that for a while, since our last earnings event in May, or not our last one, rather our May earnings event here, we had a nice gap upward. That was the catalyst for this upward channel. A bit messy here to the upside, lots of breaches to the upside here. Probably looked like a pretty attractive situation for the bulls, given this breakout type behavior that ultimately culminated with our yearly highs near 253. But it really fell apart from that point here. We went all the way back down through from above the top of our channel, through our 21-day EMA here in yellow, through our 63-day EMA here in orange. It looked like we perhaps were stabilizing around that point despite a test to the downside of that trend line. Then today, collapse, just a break below our trend line, as well as our previous lows near 218. One bright point I found is that we are finding a little footing around our purple 252-day EMA. We've also recovered significantly from the lows. We're down about 9%, 9.3% now. We were down about 12% before when we opened up earlier today. So some nice recovery from that area, but still certainly a deeply red day that has taken us through some levels that were worth watching. Certainly not a good situation for the bulls in this name.
Right, so now as far as momentum RSI goes, tell us what you're looking at here, because again, another name that's seeing a pretty ugly chart as far as the gaps go.
Yeah, and I'm trying to highlight some of the bearish signals that we saw in the RSI here with these yellow lines. First, take a look at the point.
Gosh, on the river.
Into those yearly highs that I mentioned near 253. You can see we had a very brief cross into the overbought.
I went all in with the straight came out there.
Above that 70 threshold. That was a bullish
I didn't even
signal,
see
but
that one.
It wasn't to be. We were only there for one day, then we crossed back below.
Play a little
That
slower.
was the bearish
Watched
signal.
it closer.
The cross above is bullish. The cross below is bearish here. We continued to decline here. Then we had another problematic candle here, this rather large red candle. That took us below our 50 midline here. That separates bullish momentum from bearish momentum. After that point, the trend was accelerating to the downside. Our change in price was trending lower here. Then today, unlike our last chart, we had a big gap downward and a dip into that oversold area, which is a further bearish signal here. So we had kind of this 1, 2, 3 bearish situation developing with momentum here for the RSI. These are some of the things to look for if you're using RSI as an indicator. That can be helpful when making your trading plan to check in with momentum and see what it's telling us.
Okay, and now as far as support and resistance, what are you watching here in Workday?
Well, you can see with the addition of our volume profile study, it's giving us yet another spot we've broken through that looked important here. This volume node near 225 suggests this was a point of heavy trading. I mean, we just plowed right through that, not even close to where we were there.
Closing these puts.
And you can see now the levels that I highlighted, trying to find these pertinent highs and lows. Well, to the upside, these lows right here, that's the mark to beat here. Near 218, 218.44 to be precise. That would be something to be on the lookout for. Our cross back above that area could be a sign of some improvement here. To the downside, 198.50. And once again, getting a little specific with some of these prices, that's a point where we topped out all the way back here, and then once again there before we had our gap up on earnings. That's a point to watch to the downside now.
Could grab calls there.
Obviously, our purple 252-day EMA near 206, that is an area to really watch out for as we head into the close. It's still, we still definitely got some time left in this trading day. This could still fall apart here, so watch to see if we can close above that level.
Yeah, and we'll have to see if we see any improvement on the session. It was down about, I mean, it has recovered ever so slightly on the day, but still down 9%. But we'll leave it there. Really great technical breakdown, as always, Rick Ducat, our chart master. Now trading this name, Alex, perhaps looking at a little bit more optimism than what we just previously discussed with Upstart. Walk us through what you're thinking for workday.
Yeah, the story just isn't quite the same. I know the move is way bigger, and in fact, the move is actually to the downside.
Let's look at my brokerage. Dang it.
Higher. This, in a way, is a reassessment of the landscape in this stock. The company provided guidance that was a little bit worse than its previous guidance number. However, it's still growing. It's still 17 to 19% growth. It's just not 20% plus. And so,
went by so quick, I missed my timer.
The street makes its opinions, and it changes its price targets and changes its ratings. But many were still on board. There was plenty of outperform and buy equivalent ratings. And so I looked at a way to capitalize on this move lower in a neutral to bullish fashion. What we've done is a high probability premium selling strategy we'll refer to as a skewed put butterfly. And so what we're looking at here is essentially a trade going out to November. Earnings, the sting is kind of out in many ways once we've gotten this update, so that's something to keep in mind. But buying a $5 wide debit spread, selling a $10 wide credit spread, doing the whole package for a credit. So if all of these options are out of the money at expiration, stays above 200 would be another way to say that, you would simply plan to keep that credit, which is $50. You can see it levels off above that zero line. However, where things get interesting is right here, right at 200. From 200 to 195, this thing can actually expand to as much as 550, which we see there is the max profit. It would have to be a perfect pin at the short strikes, not super, super likely, but most importantly in my mind, what that really does is it brings this break even down to 189.50, reduces the risk to 450. So can make as much as 550. Likely, if it's going to make money at all, it's probably going to be less than that. But most importantly, quite a bit below the current share price for break even and controlling that risk definition at 450.
Yeah, and I think really well put. Two names that are seeing some vast selling on this session. We will leave it there. Now, coming up next, it's time for FOMOS. We are looking at all things Apple. On some analyst news as well as reports, the iPhone 15 is becoming too warm to the touch. Quite literally. We'll discuss more on that story coming up next.
Weak bluff. GME almost back to break even. Pretty big day today. Big swing. You can bluff him off? Probably not. Oh, pocket threes. Oh, trips. Well done. You're buying anyways. The chips are getting a little light. Better way to get new chips than to lose the ones you already got. Up, psych you up. Barely? Ear tie. Good morning and Ashgar. Whoa. Comes a spy. Did actually get back into a put. Final put. I don't have in 3, but I got shaken out of those 2. Getting some coffee. Coffee. Getting close to VWAP. I think I'll probably just put a stop loss, break even stop loss on it and leave it. If we break VWAP, I mean, we complete this inverse cup back to the lows of the day. Not expecting that, but sure should have raised. Oh, let's slow play a little bit. Raise this guy. Nice. Just as good. That'd be a nice try today. Not very good. I wasn't sure if the X was like a S like it is in Chinese. I don't know how to say that. If it's actually X. Okay. Oh, ugly. Ugly set of cards. You called? You hit this straight. Little slow play, well done. We'll play at the end. Please don't have clubs. Please don't have clubs. See him have any? This guy probably had one club. That's all I needed. Heck. Already have an 8. Tired of bluffing. Want a hand so I can slow play. Well done. Wait, no. It's straight. I'm an idiot. I couldn't change it. Like, it doesn't change that fast. Very slow. Everyone had a straight. Coming down a little bit. Still just above VWAP. Whoa. Side flush.
than 50% year to date, more than last 12 months. But there is a little bit of news happening today that I'm not quite sure if it's shaking investors because this stock only moves incrementally. But the European Commission actually decided to prohibit the company from acquiring eTravelli Group, which is known for the brands My Trip, Go to Gate, and regulators complain that, or they claim that it would further cement Booking's dominance in the industry. You know, we've been having these antitrust concerns happen when companies want to merge or acquire other companies, obviously, but Booking actually says that this is not a competitor, that this particular group of companies is complementary. Another defense that we often see with companies. But Booking already owns Priceline.com, Booking.com, Kayak, OpenTable, RentalCars.com.
No, he's not.
So
Both had it.
I don't know how this is going to work out. They announced plans to acquire this company back in 2021, and
Coming
it
down
was
to
denied
VWAP
by the
there.
European Commission, but they want to fight.
I haven't
for it.
used my second string account.
Really
Considered it
I always
though.
find that this
Break
is
of this
like
channel
sort of
and
the
this little head and
umbrella company,
shoulders.
right? Because the relationship
But
between
we're close to
Booking
VWAP,
and
and I
its
don't like to
various,
trade around
the
there.
airlines and the hotels, it's very lucrative because it's sort of like the relationship. I tend to compare this to like an Uber Eats or a courier
they're
versus all
straight.
of the restaurants where they need each other
Beautiful.
to survive. They're both winning from that partnership, but then again, the costs and the advertising, the marketing then get thrown into things. So this has always been an interesting company to me. I agree with Alex. Price tag is absolutely ridiculous. Split your shares. This is unattainable. To me, there's like a psychological level associated when your stock is over $1,000 at this point. But as far as the outlook goes, we've looked at airlines, cruise lines, we've looked at the hotels that have seen this exposure, and I guess I have to imagine that could then bleed into some of these OTAs for Nita going forward, because all we keep hearing is that the peak summer travel is behind us.
Straight out there.
Absolutely, and we have to remember those input costs like fuel. Now, it may not directly impact a Booking Holdings, but it impacts the companies that Booking Holdings has. It'll undoubtedly impact the rental car company at some point. Perhaps we know that other travel industry companies that need fuel, it'll more directly impact, like the cruise lines, you know. So I don't know, we'll find out like what this looks like. But so far, as investors and as customers, they taper down on their spending. That's already made an impact on some companies.
What I think surprises me about this, and I don't know why it does, 85% of the revenue outside of the U.S. Goes to show just even these travel companies that we maybe associate with here in the U.S.
Is that?
85% is outside the U.S. This is as much of an international look at travel as really you're going to find.
Both these guys have sevens.
I mean, and that even goes to it. You know, are people holding on to dollars to spring for the international tickets? Is it more coming from, as you say, it's definitely more action coming from international
I'll hit the top of that channel.
And I'm personally interested in looking into the details of the bookings of Booking and their different companies and where people are traveling and how often they're traveling to.
I do know that we know from I believe it's some of the cruise lines
What
that
was
have
it?
said all anyone cares about right now is traveling to Europe. I don't know how they're affording it, but hey, it does seem like that's at least also the trend across all of my social media feeds. Everyone's in Europe, and everyone's been in Europe all summer long. We'll leave it there. Really great breakdown. Renita Young, Senior Markets Correspondent here.
All right, I'll
for
probably
the
close
network.
if we get
Now,
another test on
last but not
VWAP.
least, we are looking at our under 30 name today. We're discussing all things really with George Taylor's
Broke that
Sunrise.
channel.
We did see shares touch 52-week lows earlier in the session.
That bounce. Still climbing up there. There's definitely a pocket, probably over my pair. Didn't have anything, but lost the sixes. This guy kept playing along. Wow. Uh-oh, Bob, are you back into puts? Yeah, put fix for the day.
The disruptions from COVID and the pandemic, they do better when car prices and car trends are more stable and less volatile. They seem to struggle when things get more volatile. A UAW strike, disruptions there may just be that more volatile period. Stock traders certainly don't like it today. Stock down about 10%, Nicole.
Right, understood. Okay. And then we're looking at the new iPhone, and there are reports that it's too hot to handle, that it's actually heating up.
Yeah, the good news is demand seems strong for the iPhone 15, but there is a report, and I'll read it so I get it right. So an analyst said that in a Medium post that iPhone 15 temperature issues are likely due to the thermal system design compromises to achieve a lighter weight and are unrelated, however, to
Did you get those at open,
Semiconductor's
Bubba?
3nm node. So they think this could hurt demand and deliveries down the pipeline. This is just one report. Apple stock actually higher today because another report came out and said demand for the iPhone 15 is actually tracking ahead of expectations. So a little bit of a mixed bag on Apple. And what's the end result? It's going with the market, up slightly on the day, Nicole.
Right, understood. Okay. Good to see you, Kevin Hanks. Thank you so much. Let's get a bigger picture here. Rayanne Mitrione is with us, partner, Callan Family Office. Thanks for being with us. So what do you think here? I mean, we know that August, September, October is traditionally a tough time. Your thoughts here?
Yeah, thanks for having me, Nicole. Great to see you. It's, we've had such a great start to this year through July. We've had a pullback since then, and especially, in the last week following the Fed's comments last week. And with interest rates moving up, the possibility of another rate hike, and starting to see rates move up really along the curve with the 10-year Treasury now above 4.6%, hitting its highest level since 2007. So the market's reacting to that, and we're
lagging.
But it's kind of a short-term reaction in our view on this pullback that we've seen. There are certainly mounting headwinds, but there are also a number of positives and reasons why stability could continue for a little bit longer. I mean, there's U.S. businesses and households still have a decent amount of savings held over from pandemic stimuluses, which have made them more resilient. Relatively little corporate debt matures in the next 2 years, which leaves many businesses somewhat insulated from higher rates. The typical consumer's debt burden is relatively modest too. Many locked in lower rates before the hikes started. We've seen inflation moderating. The jobs market remains relatively strong. Jobs growth has only just started to slow, and unemployment remains incredibly low. And wages have recently outpaced inflation, which is supportive of continued consumer spending. We saw that the number ticked down a little bit from the second quarter GDP number, but it's expected to come back strong with spending in the third quarter. And GDP expectations are north of 4% for the third quarter. So while there are certainly mounting headwinds, we do think there's still reason why the market can remain resilient. Consumers can stay strong for a little bit longer, but we would expect to start to see that taper off as higher interest rates have more and more of an impact going forward.
Right, understood. So at this point now, as we head into a new quarter, do you think things could change? When people talk about Santa Claus rally and the resiliency of the consumer, and you still have a strong dollar, I mean, can things sort of turn around for the better?
I think they can. Like I said, I think there are still a lot of reasons why the consumer is still in a good spot. There are certainly more and more concerns with higher rates, higher prices, higher gas prices, higher mortgage rates, student loan payments resuming. There are certainly a number of things in the column that that will lead to less and less of a willingness to spend from consumer. But right now, still in a good spot. And consumer confidence ticked down a little bit this week. And that could also be more related to some other items, such as the looming government shutdown. But right now, we do think that the consumer's strong. We could see another Santa Claus rally. This pullback felt a little bit overdone potentially over the last, recent period, the last week especially.
Breaking the upside of that channel.
We've seen a little bounce yesterday and today, and we could end the market higher at the end of the year than
Kind of in the chop.
Right, understood. And so when you see opportunities at this point, I mean, when you look at tech and AI, how are you feeling about those group of stocks, some of which have really been high flyers, and they've come off the highs, of course.
River was kind.
Where there may be opportunity going forward. How do you feel about tech, the Magnificent Seven, for example, and AI and the frenzy that we saw for some of those names?
Yeah,
it's been an
incredible year for tech and AI. It's definitely been catching a lot of the headlines. And even though it's come back, and even though it had come up so much, this is the transformative power of AI and the disruptive innovation that some of these tech companies have. That's a driver of long-term returns. We certainly took some profit off the table, at the end of July after such a move up this year, but it's going to be here for the long term. We have these companies that are still competing to have the best products and services in the artificial intelligence area. And that's going to continue. It's going to be a driver as more and more comes out. More and more companies across all sectors are adopting it and looking for ways to improve their productivity and get ahead from a competitive standpoint. And even though we've seen a pullback recently in that sector, the Magnificent Seven especially. I mean, even through yesterday, they're on average. Return for those 7 stocks is still 84% this year. Even though the S&P has been strong, that's definitely been where the returns have been, and we expect that to continue. And we're looking to explore that and exploit it in the private markets to a large degree. We're looking at technology-focused private equity funds and venture capital secondaries funds that are trading at a discount. We view those as very attractive areas right now, and we do expect there to be continued
do you find that sort of the alt investing is becoming more popular now, and why?
It's been an interesting environment. It's taking, the fundraising has been slower after a really difficult year in 2022 for the markets, but it seems like it's starting to pick up, especially in the private equity area around anything in the technology and venture space, as well as in the private credit markets. I mean, you're really seeing record fundraising on the private credit side as we've seen traditional banks really pull back from the debt markets, and you're seeing companies having to go elsewhere to raise capital. And it's been an incredible opportunity, and we view that as a very attractive area right now. So private credit is a big theme for us.
Right, understood. It's great to see you. Rayanne Matrioni, thank you so much for being with us today. Love having you on the show. Thank you. From the Callen family office. Coming up next, is the bull run for oil nearing its peak? We take a closer look. Charles Schwab's Jeffrey Kleintop ahead.
Not a heart. 2-4, nailed it. Micro up a little more there. There's a little pop on SPY. Still going. Okay, I'm out of those putts. Waited way too long. Nice channel break to the upside here for calls. I had the channel break, I just didn't want to believe it. Midday chop. Wasn't relying on it quite as heavily.
Jeffrey.
Now that we've moved past rate hikes, I think some investors are saying that's over, but it's not, right? Because as you point out, QT has been going on for a little while now, and it's set to continue, meaning central banks unwinding all of those central bank purchases of bonds and other assets they've made over many, many, many years. And looking back, we don't have a lot of periods to gauge what the stock market impact might be. Japan engaged in quantitative tightening back in 2006, 2007, and the US did it from 2017 to 2019. Both periods, we saw a lot of volatility in the stock market, a 19% peak to trough decline in the stock market, and the period of QT ended for the stock market very close to where it began. I think the current QT, quantitative tightening environment, is acting as a drag on the overall stock market, but it's hard to see because of those AI stocks. If central banks continue QT, I think it could be a real drag on this market given its narrow leadership. In the US, if you strip out those 7 mega cap tech stocks that have been driving the market higher, the S&P 500 is flat year to date, I think reflecting this very tight monetary and policy environment, not merely central bank rate hikes, but this quantitative tightening that is likely to go on, maybe
What
even
the
accelerate.
heck?
The Bank
The
of England
kicker?
is accelerating their program. We may hear more
Thanks.
about that. So you can see here, that blue line, the S&P 500 X those big 7 stocks, flat for the year. I think
Some
quantitative
Starbucks.
tightening increasingly going to be important for the markets, even as rate hikes are in the rearview mirror.
Yeah, understood. When we see GDP prints here at home, and with the growth that we're seeing in Japan and India, for example, which we've talked about, the slower growth that's occurring in China, what should we be taking away from that when we look at the global picture?
The global economic picture is still fairly soft. It has shifted in terms of like the demand for oil is now outstripping supply, but mainly because supply pulled back, right? So the economic picture for Germany is looking to be another quarter that's maybe flat at best for Q3. For Japan, for the UK, we're looking at 3 of the 5 biggest economies in the world having a pretty lackluster economic environment here in the third quarter. Might look a little bit better in Q4, but not a lot. So the demand side of the equation is still fairly weak globally. I think we may hear some of that as we go through this earnings season, particularly for services businesses, where the economy really slowed down in Q3. Manufacturing, of course, remained weak. Might have rebounded just a little bit in China, but overall globally, that has really come down. Consumers are really not as focused on traveling as much or restaurants and vacations as much as they were, and that's beginning to weigh on that portion of the
Breaking out of
economy.
that upward channel.
I'm really interested in what we hear from the guidance of global businesses as we move through the third quarter.
This was more of a
on those service sectors.
bearish channel.
Right,
so it might not hold out
so
here.
At this point, how are you hedging the high interest rate environment? Because people are still obviously looking for that. That is what we are expecting, higher for longer, right?
Yeah, rates have just been consistently moving up. We talked about how to hedge rising interest rates using short duration stocks a couple of years ago. That's continued to work, even as rates have continued to rise. What I mean by short duration is stocks that have more immediate cash flows than those that are expected to deliver more of their cash flows in the distant future. I use the price to cash flow ratio to measure this. The lower the ratio, the shorter the duration for the stock market. And really since August of 2020, when rates began to rise, short duration stocks have been outperforming the market, absolutely killing it. Very different environment than the 2010s where long duration stocks were the place to be. So they've really outperformed. That's the orange column here. And the far right one, you can see the performance since August of 2020. But then looking at this year, we had this period in March and April where they really pulled back. Many of these low price to cash flow stocks were in the financial space. And Nicole, you and I talked about it at the time, and I was saying, I hope this is temporary as we go through the banking stress. Thankfully, it was. We've come out the other side, and once again, those short duration stocks are leading the market. So I think this is a place to think about as you're investing, whether it's across different sectors or across different markets. You want to think about those lower price to cash flow stocks continuing to reward investors.
Right, understood. Can I turn your attention over to oil? I know everybody talked about the $95 print that we saw overnight. We're at these highs that we haven't seen in over a year. What are we seeing here, and what do you think is behind this? Is there a path of least resistance? What are some talking points when it comes to oil and what we need to know?
So, OPEC put its cuts in place that really helped to drive prices here back when oil prices were around $75 when they put those 2 cuts in place. So now they moved up to 95. I think, we may start to see people changing their habits a little bit. I know the Conference Board's latest measure of consumer sentiment came in at a 4-month low, really responding to higher gasoline prices in there. We've also seen air travel pull back a little bit here as jet fuel has boosted ticket prices. So it may be that OPEC is going to get worried about oil-driven demand destruction or oil price-driven demand destruction and begin to weaken on that. One of the things that I think is most interesting is there's 10 times as much oil traded as there is used. So taking a look at oil positioning by traders can really tell us a lot about what markets have priced in. And what this chart's telling you here, that's oil price on the top, but on the bottom is the relationship between longs and shorts between money managers. Right now, they're holding 15 long contracts for every short contract for crude oil. That kind of an imbalance is pretty rare, and it probably tells me that this supply-demand, the very tight supply-demand imbalance, is likely fully priced in or very close to being fully priced in at this point. It could go a little further, but to me, the reward versus risk in oil just doesn't look as favorable from here.
Yeah, and what am I leaving out? I mean, is there anything else that you've really been hitting this week?
I think the numbers that we're getting out of China continue to surprise on the upside. I mean, you talked about that a little bit earlier. China's economic momentum is improving even as the rest of the world is still slowing down. We got a speech overnight from President Xi Jinping talking about more efforts. So further of that sort of drip process of dripping out more stimulus, which the economy seems to be responding to with every piece of data coming out here in September, surprising on the upside for China. Not a V-shaped recovery, but one that's showing some clear signs of stabilization. Could be good for those companies that have a lot of China retail sales exposure. Many U.S. manufacturers and a lot of European ones as well, very exposed to the China consumer.
Yeah, an improving situation there, I guess, would be a good thing for the global story, without a doubt, as you noted, some improving conditions. Thank you so much. Jeffrey Kleintop, love that you're on with us each week. Thank you very, very much. Chief Global Investment Strategist at Charles Schwab. Up next, we're taking a closer look at GameStop's decision to name its executive chair as the CEO without compensation, what it could spell about the future of this company that has been somewhat troubled.
You know that tech stock we talked about? I picked up 500 shares.
You get in at a good price?
Oh, yeah.
Schwab saved you how much?
With Schwab Order Execution Advantage, you get price improvement on 96% of orders.
Okay, Spy's just chopping around now. Pretty nice setup today, though. Why we don't like her? What was she saying?
Executive chairman has taken over as the CEO. No pay. Ryan Cohen has been everywhere, as we know. He's had a long career. Tell me a little bit about what you thought.
Well, long career. I think I have shoes older than the guy. He's 38.
I know he is young,
so he's had some modest success.
Without a doubt.
He has invested in a lot, and he founded one that was great, Chewy, and he's gotten a ton of credit for that and deserves it. He's gone in to tinker and try to fix Bed Bath & Beyond, and that failed spectacularly. And he's gone in to tinker and try to fix GameStop. The difference with GameStop is there's no debt, so they're not going to go bankrupt anytime soon. It's a slow bleed. Am I surprised that he named himself? That his handpicked board unanimously appointed him? I suppose I'm surprised that their candidate search found nobody that was willing to take the job there. When I say surprised, one would think, if he would throw enough money at a seasoned executive who wanted a CEO role, he might be able to attract somebody. But I think this is proof that there are no competent and sane people willing to work for him. So he already ran through the competent ones who
pretty
stretched
dramatic
reason
conclusion.
and took a chance, and they've all been fired. So now there's nobody who wants to go there just to be thrown under the bus. So Ryan Cohen was the only likely, candidate.
Got this straight, doesn't it? Yeah, I thought so.
Belief in someone that had been there and sort of was ousted?
By
Was there
breaking out
anybody
the
that you sort of had
upward
a
channel.
lot of faith in and high hopes for?
Yeah, I mean, the guy that was there when Ryan Cohen took his position, George Sherman, was really good. And Jim Bell, George was the CEO, and Jim Bell was CFO. And those two guys had kind of orchestrated, masterminded the balance sheet cleanup, and they pounced when the stock ripped up. There's a movie out now called Dumb Money. The Dumb Money drove it way up. And they pounced and sold stock and wiped out their debt, and they managed the balance sheet beautifully. And their reward was they were allowed to accelerate their stock-based compensation and ride into the sunset with hundreds of millions of dollars each. So good for them. But they were competent. Then Ryan Cohen came up with the brilliant idea of be like Amazon. So he hired 3 very experienced.
Does he not realize that was all from
Amazon
Cohen?
executives. The problem is nobody's like Amazon except Amazon. So they couldn't replicate it. And they were given the death penalty for their failure. Think of Ryan Cohen as the queen from Alice in Wonderland, off with their heads. He just executed them. And now, who wants to come to work there? I mean, he's an unstable guy with no vision, and you have to,
I didn't even think
his
of the
line.
whole
So,
house.
No, there's nobody sane who will go to work there.
So at this point now, the new initiatives have failed spectacularly. You have Ryan Cohen running the show. Do you foresee takeovers, mergers, acquisitions? Are there parts of it that are worth anything?
Let me correct a term. Take under, maybe. Take over, no. Nobody's going to pay a premium for GameStop. It's worth $6 a share, maybe. And somebody might buy it for $6 a share because a competent retail management team could trim store count and manage expenses and kind of ride this declining revenue stream into prosperity and make money. He doesn't have anybody who's got good retail experience. He chased them all away. So no, I mean, maybe if he's willing to sell the stock for $6, but it's got to get to $5 before he's willing to do that. He is the dog that caught the speeding car, and he's hanging onto the bumper for dear life. This car is speeding away at 60 miles an hour, and he doesn't know what to do. He made himself the boss just to make sure nobody else knows either.
You know what? It hurts. It hurts because GameStop was a monumental, wonderful retailer for kids and people who loved gaming, and it was like the go-to place. Then came along digital and downloads, and they tried to give it a go a little bit to get in there, but what part of it could be salvageable in your mind? I mean, aren't some kids still with consoles and things like that?
For sure. And, I think of GameStop and physical retail the same way I think about movie exhibitors. There's a place for them, and there always will be physical sales so long as it makes sense for the game companies to put games in physical format. So GameStop can survive, but not in its current form. It's got to be much smaller than it is now. And so think about movie theaters. They can survive too if we trim out the unproductive ones. And that's really what GameStop should be doing. So get somebody like, I hate to say it, Adam Aron to run GameStop. He would figure it out. He would actually do the right thing and trim the store count. We don't have that guy. So I don't think it's going to happen.
I mean, at this point now, how do you feel about gaming and retail overall? I mean, the two don't even really necessarily go together anymore, right? I mean, unless you're running like a Dave & Buster's where people go and play video games with the joystick.
Yeah, games. I mean, the biggest.
Why is he even talking about AMC?
Games has been that it requires a pretty expensive hardware purchase up front in order to play. So either a good PC or a console or a Switch. And I think that Microsoft has figured out that we're moving away from that, and they're going to make games available on any screen through streaming. I think that's the future. So the guys who make the content are going to thrive. The Activision is now being acquired, and Electronic Arts and Take-Two and Ubisoft are going to kill it. but I think that the hardware companies are in trouble. And I think the guys who sell physical goods are in trouble. So we're going to continue to consume the content just like we consume movies through streaming. It's great for the consumer. It's not so good for the retailers.
Yeah, I love what we're talking about. So Ubisoft, which obviously is a beneficiary of what's been going on here with Microsoft and Activision Blizzard, right? And then you mentioned Take-Two and EA. It sounds like those are all in pretty good positions. Do you have any buy ratings? I know you're saying GameStop is doomed. Do you have any buy ratings or any of those names that you do like right now?
All of those, and you know, I think Take-Two is just an extraordinarily well-run company. EA is pretty well run, but they have a very heavy dependence upon licensed content. Ubisoft's the one that nobody seems to understand. They win so big in this Microsoft Activision deal. They're getting global streaming rights to all Activision and Blizzard content, and that's pretty material. And they're going to obviously sell it to Microsoft on an annual basis and probably pay what they're getting back for that. But they gain the ability to stream in Europe. And so Ubisoft can start delivering Call of Duty to European subscribers for $5 a month.
The Red
Why would you
Killen's
not
buy.
do that?
It's
You
just
got
in this
Call of
chop
Duty
zone now.
And World of Warcraft for $5 a month instead of buying them separately. I think 10 million people will do that. So I think
Big red candles
Ubisoft
at
is
Blizzard News.
positioned to hit a grand slam, and the market hasn't figured that one out yet.
Yeah. All right. I will continue to watch Ubisoft because obviously I know I've seen it and how it has been doing well on the heels of trying to get this merger to go. The Microsoft Activision merger to finally get all the approvals it needs.
Oh, this
so
is what's his
you
name talking, isn't
today
it?
say if GameStop at $17, people should sell it.
Cook?
Really.
He started talking at 1. He's probably not still going, is he?
Your price target is $6.
That looks like
and
some
if you're
news.
gonna have a take under, someone comes in and says, "I'll buy GameStop," it's going to be less than that. Michael Pachter, it's great to chat with you. Key story.
Thank you.
So glad you were able to come on with us today. Thank you very, very much.
I don't usually
Michael
like.
Pachter.
I'm not usually easy to convince that this guy's
The second half of our show, we're
bad
taking a
actor,
look
he's
at
got a
AI
short,
models
or
that
he's
predict
paid, or
market risk and why one just
any of that
turned to
conspiracy
risk
stuff.
on.
Which,
Hey,
whatever.
that means you could
That
take
guy
some
though.
chances. Maybe things are getting better.
All right.
Let's find
If
out.
there's anybody
Boys and losers in the S&P.
that I would think is working or getting paid by the shorts on those stocks, it would be him. He even talked about Adam Aaron. Adam Aaron would fix it right up. He'd take huge fat compensations and just dilute, and it'd be all better. Why is flushing here? I don't know. Assuming there's some kind of news. Taking the puts on the channel break. I'm like kind of out of it today. I think I'm just chilling. I think I've done well on the trading account. I'm good for the rest of the day. That was a big flush down to VWAP. I don't know. I'm gonna have to cut out a little early too in about 20 minutes or so. Yeah, what he was talking about George Sherman saving it by offering shares? Was that like literally what Ryan Cohen put in his letter to the board? About the plan they needed to have? Packner? I'm not sure what his name was. He's the Wedbush guy. Trying to raise. Look at that bounce. Yeah, that must have been news or something. Wedbush Securities. Just go back a little bit. It might show his name. Yeah, follow the money trail from Wedbush. I think we've seen dirt on Wedbush before. That was hilarious.
My point is, it's been a tough run. August and September.
I mean, if it wasn't so straight-faced, I would have thought he was joking.
In the meantime, we are here today with some up arrows. The S&P's at 42.94, and the Nasdaq is up almost 0.7%. The Dow's up 64 points, and the Russell is gaining 0.9%. Let's get to a top story today, an interesting one. Bye-bye mirror, hello Peloton, says Lululemon. Jenny Horn, markets correspondent here, taking a closer look at this new partnership. Jenny.
Yes, and I think this is a big deal for Peloton, less perhaps of a big deal to Lululemon, which has been dealing with that pain point that has been their mirror acquisition since about 2020 when they first unveiled that deal. But we did get news.
He's been in AMC since 2015.
And Peloton did announce this
He's been an investor
partnership, as Lulu will now provide the apparel for Peloton, and Peloton will be providing the online
Doesn't he have to disclose that when he's on the being interviewed?
Membership platform, which does have various fitness tools as well as different content creation. So what is seen as, I think, a great way to get the Peloton brand out to, say, like Lululemon's membership community, which is around 13 million, so pretty substantial. That's why we're seeing Peloton have a more favorable reaction.
This table I've been in all day is just sucked.
6% move to the upside, but beginning October 11th,
he's maybe not still holding it. He probably cashed out before it totally dumped.
Product lines that will be available for purchase on Peloton stores, online, as well as in actual stores. The co-branded apparel will also launch over the course of several events that they're now co-branding.
That one's hilarious.
Doing a tour called Peloton on Tour that actually kicks off.
I'm surprised the Peloton reaction to this isn't larger.
Lululemon ambassadors also attending the event. So to me, this is a great partnership. Honestly, Nicole,
that was a full on just.
That
was a hit piece on Ryan Cohen and GameStop. That's crazy.
High-end athleisure wear, but I was actually reading what the street thought of this. Seems to be immaterial to Lululemon. This is definitely more of a lift for Peloton shares, because what this analyst was saying, and I thought it made such a good point, is those that use Peloton probably already are Lululemon customers. This isn't exactly gaining any new traction, because odds are, if you're familiar with one product, you're familiar with them both. I think that's a really good point. I love both these brands, but they don't need to necessarily gain me as a new customer. So that's maybe why Lululemon pretty much unchanged on the session. Although we do have Nike earnings today, so that catalyst for Lululemon to watch out for.
Yeah, I mean, this is a 5-year partnership. It certainly seems, it's not bad for Lulu, but it certainly seems that Peloton is the prime beneficiary here. And in the meantime, Lulu will take a little loss from that mirror sale when they get rid of that, sooner than later. Jenny Horn, great to see you. Thank you so much. And I will add, folks, I was speaking with Caleb Silver earlier today, and he was saying since the pandemic, Lululemon's up 171%. Peloton down 80%. So you see where shareholders put their money to work. All right, some input on
Why did
AI.
I keep calling? He must have had something.
Let's turn our attention over to Francis O, APAC CEO, Craft Technologies. Thank you for being with us. So tell us about this proprietary AI model. You and I have spoken before. It actually forecasts risks in the market, when to get in. We leave it to AI sometimes to make some decisions for us. What's it telling you now?
Yes, there are definitely the bad catalysts in the market right now. The bad news about the higher for longer on the interest rate environments, and always going up to 100. Possibly evolve, and also their strike from the UAW, and also the government shutdown risk is imminent. There are lots of the negative catalysts in the market, which is for sure and true. But at the same time, the proprietary risk indicator model is telling that it's still is sending a risk-on signal, so telling to the investor to stay the markets, keep carry on. But one caveat is our model is currently predicting on a weekly basis. So the number right now is pretty much a risk on, but it could be changing to some different number the next week. But at least at these stages, our model is telling the market is still telling the investors to suggest to the participate in the market.
Yeah, and so this is a weekly signal, basically, I assume.
Yes.
Yeah. So tell me about what it's saying about oil. I see $100 a barrel coming according to this AI model.
20,000.
Yes, oil is one of the most biggest concern market right now, not only for our AI model, at the same time personally as well. And there are a couple of the key data points our model is looking at.
Bounce on spot. That must have been news or something.
The commodity price and commodity volatility as a key input feature.
Get an all-in from this guy,
models of final
even though he probably has a jack.
And when you only look at about the oil prices, it's definitely going up, which is becomes the one of the biggest concern for the market right now.
We finally
but
called.
when you look at the commodity itself is broadly, for example, the Bloomberg Commodity Index, BCOM, and that one is actually for the last 1.5 months is coming down. So oil is coming up, but the other part of the equation of the commodity basket is coming down. And also, once more interestingly, the volatility of the commodity price itself is coming down. And right now, if you only comparing the current market situation versus the last couple of weeks or possibly months or the 2 months before, is not as good as before. But if you compare the market situation about, if you're winding by a little further to like
I'm such an easy target. Might as well keep taking my chips.
The Silicon Valley Bank has collapsed, and still the signal we are seeing right now is actually much better in the absolute term if you compare to the early March this year.
Yeah. Explain to folks what AIDB is. It's that launched earlier this year, your AI pilot ETF. Tell folks about it. What is it? Maybe why, if they're interested in investing in it, why should they?
Sure. So the one thing I believe and the teams believe is the artificial intelligence model. The one of the key benefit is the leveraging is 24/7 calculation. At the same time, the market surveillance plus the ever evolving the system, the nature of artificial intelligence. It is actually designed to deliver the accuracy prediction of the market downside risk. And there could be the two different approach. The investor could utilizing AI. Either one is come to our website which is publicly available. We publishing out this risk indicator so everyone can come to see the updated data on a weekly basis. Another one is actually utilizing AIDB, the AI pilot use large cap dynamic beta and income ETF, which is incorporating this AI risk indicator into the investable product. And the beauty of this, the AIDB is this is the designed to incorporate the artificial intelligence prediction model on the market downside risk. So it doesn't necessarily pay the higher cost for the hedging the markets. For example, there are the comparable product in the market right now, but the market downside risk hedging product are actually paying a lot of cost for participating in the market hedgings. But our model AIDB, the basic the philosophy is the participating in the market as long as possible, but only it will do the smart hedging for the market downside risk whenever it just needed.
Okay, so last but not least, I want to wrap this up in almost like a sound bite. So when people walk away from this, they say, I got it. Your model is saying buy. Right now, it's risk on, a strong risk on signal for the near term momentum, not medium term, which sees more volatility. Is that right? Should they load up the truck? Load up the truck? I mean, what does this mean?
Let me possibly this could be a bit more accurate interpretation. If you stay in the market right now, then you are no need to be panicked. by all the bad news right now, the momentum or all the bad news about oil, etc., which is definitely the piling up the negative catalyst. But at this stage, the AI model tells that by processing the latest available the market data, still it is okay to participate. No need to panic about sell your positions or hedging your position to the massive amount of no need to out of the market. But that is what our model is telling at this moment.
Right. Good. Okay. Good to see you. Thank you so much, Francis O. Craft Technologies. Really appreciate it. Thanks. Still ahead, a look at Micron. So what about the timing of a turnaround? What can we see ahead for a name like Micron coming up?
So many straights today. All right, guys, I'm gonna have to cut it there. SPY made its cup. It's made its handle this afternoon. Could trace some more. 427 maybe if it breaks VWAP. We'll see. But I gotta take off. Base trades pretty good. Went long a couple times. Let's see, where were we here? Went long right here. Closed out one here. Guy stopped. Or the other one? I went long again here on this break. And that was the trade. Actually, my puts did pretty well too. Went long there. Close it out here and here. And then grab puts. Started, I got one like right around here. Got another one somewhere in here. Closed. Or closed one. Got back into them. Here. This channel break. Closed them. Closed all but one. Or closed one out of the two. Got back into them. Or no, was that cloudy? Or was that? Yeah, that was here. I had a lot here actually. I loaded up on them. Ended up closing them. And then, well, then I was out of buying power. So I only had a few for this drop. But this drop helped. Closed out. Kind of whipsawed a little bit. I don't think I got back into calls, but closed out my puts. And yeah, that was it for today for me. This chop right here could have just held through it a bit. I guess my channel was a little bit lower before this. Did break it. That's part of the reason I closed out. Otherwise, that would have been a nice move too, but not bad. Small account, completed in the last couple days, and so percentage on it are easier to get bigger percentages when it's from a lower value. So almost 30% today on the small account though. So I'm happy with that. Tomorrow I've got big data, PAL and stuff. Or no, PAL's after market today at 4. Tomorrow's PCE. For PCE, all of that stuff. 8:30, so we'll see you guys. Probably not at 8:30, but tomorrow. Be back. Thanks a lot, Jay. Appreciate it, man. That was quite the interview of that guy. Thanks, Blue DJ. Thanks, Cassidy. Thanks, David. Melanie, thanks for coming by, guys. We'll see you guys on Discord.